السلام عليكم.
وعليكم السلام يا حبيبي. كيف
How
حالك؟
are you, Waqar?
الحمد لله my brother. How are you?
Alhamdulillah Rabbil Alameen.
All right. You guys ready for this class today?
Wallahi,
Inshallah.
I'm very excited.
All right. Inshallah. We're gonna have everybody in
Especially
here.
that I
So.
missed, especially that I missed Joel's class a couple of weeks ago.
Oh, that was a good class, man. I'm
Yeah,
surprised you
I,
missed that.
I missed it, man. I unfortunately had to shift my attention from the stock and crypto to work. I
Ah,
had a had a very stressful couple of weeks.
oh, inshallah, may Allah make it easy for you, man. That's what we're trying to do, right? It's just to get away from the rat race, even though a lot of people are caught up in it, right?
Yeah,
Inshallah, financial freedom, man. That's what we want.
inshallah.
So I'm just waiting for everybody to come in. So, you
Omar
know,
Khatib,
Omar
where you
Khatib,
from, Akhi? Khatib, where you from, Akhi?
Assalamu alaikum. I'm an American-born Palestinian. My father by way of Palestine, and but raised in the New York area, so pretty much New York.
أهلا
New York,
وسهلا.
born and raised. Alhamdulillah, that's great. What's up? What part of New York?
Upstate New York, but I did spend a lot of time in the city as well. I went to college there. Visit there a lot as well, mostly Queens.
Oh, nice, nice.
Yeah,
The
so
running grounds,
yeah, pretty much. I mean, New York City over the years, I've witnessed from like the 90s when I was a child until now. I've pretty much witnessed it go to a point where like you really can't have poor people in New York. Like it costs money to breathe out there now. So it's just been a radical change, heavy gentrification over the years. But it's still a beautiful city.
Beautiful, beautiful, right. So just wanted to basically okay, so we have Obaid also on board. We have Ledge Khan, right? Right now, since Kamal's not on board, you guys want to basically introduce yourselves and stuff so we could get a little community going, right? Because this is the ultimate goal of our communities. Have even though we don't meet each other physically, right? We meet each other virtually, and we have a common ground and common purpose, right? So if you could be a little bit more engaging and active, that is the ultimate goal, right? So you might not realize it. Your questions, those things can spur into a rabbit hole for say, and basically, educate other people about questions that they had or they, provide answers that they didn't even know that they needed. Do you understand what I'm saying? So that's the only reason why we're doing this, kind of hosting these platforms. So just before Kamal comes on, I just want to go around the room. All right. So Muhammad Adi, you were there. Omar Khatib, right? So let's go start with Obaid. All right. If you could unmute your mic, and then we'll
Hey,
go on.
assalamu alaikum.
Alaikum salam.
I'm actually a childhood friend of Kemaul, and we've been in different groups talking about stocks and options and all these other things, and it's just is something that I want to learn furthermore to grow myself and grow my investments, and just just it isn't hard to learn anything new. That's something that I haven't learned before.
Awesome, awesome. Really appreciate you being here, right? Yeah, so let's go around again until Omar comes in. I mean, until Kamal comes in. I'm sorry about that, right? After Obaid was Lage. Lage, what's going on, man? How are you? And who are
Hey,
you?
Assalamu alaikum, fellas. Can you all hear me?
Yes, we can.
All right. So, best introduction I can start with is I'm Nomi's youngest brother.
Oh, mashallah, Nomi.
Thank you so much. So he actually, I've been hearing a lot from him via this
أهلا
group.
وسهلا. This guy is part of the clan.
Yeah. So, my brother's been mentioning this group a couple of times to me, and it's been a long time that I've wanted to join. Alhamdulillah, I finally got the opportunity to do so. I just find it unfortunate in my personal situation. I work for the federal government, and it's hard for me to keep up on the daily chat group just because I don't have access to my phone while I'm in the office. So, I do come back to messages like 400, 500 sometimes, and it's just hard to keep up with it. But my brother does a good job of, keeping me updated with most of the information that's being passed around. So, looking to learn a lot from you guys. Again, I depend on my brother, I depend on you guys for, practical advice, and just hoping to gain some knowledge from all of you.
All right, inshallah, my man. Hopefully, we could try to try to accommodate your requirements and stuff like that. But we do have Kemaul on board right now. What we're going to do is trying to add everybody, all admit all. I don't know why it's not letting me do that. Okay, good. Here, there you go. Okay.
Hey, good night, everyone. Welcome to our class. Happy to have all of you. We're waiting. We had a lot of people register. So we're waiting, just maybe just give it a couple more minutes and then we shall begin. I'm excited because this is these are exciting times if you guys haven't been paying attention to the world that we're living in. And for sure, I think everyone has to kind of stay in the loop. And many of us, either don't have experience, didn't have experience, would have loved to have had experience in the investing world and kind of having some sense of direction, not only for the long term, but also the short term as well. And we were not taught these skills, right? We didn't have a financial literacy class in high school or junior high school to give us, equitable knowledge with the rest of the country, unfortunately.
No, I think they have them now. Like, I think like now they're starting to introduce them, which, is really sad for me.
Yeah, it sucks for us though, right? It sucks
Absolutely.
so here we are. So we do have to equip ourselves. For those of you who are not part of our investment group, we have a group by the name of Crypto Exchange Journal. Its membership is now over 150 people. It started with a few guys. It has really grown exponentially since. And I think everyone, at least the main players who have been in it for the last couple of years, 2 to 3 years, have benefited greatly. It has expanded our knowledge. And as a side thing, it's kind of nice to make some extra money as well. I mean, that doesn't hurt. So let's just give it maybe 2 minutes, 8:05 start. We'll start promptly. If you want to go grab like some water, a notepad, something, take a bathroom break, whatever, just kindly do that. And at 8:05, I will begin.
All right, and just want to make sure, basically, where this is not going to be, I feel like, if you have any questions, please use the chat bar on the side, right? It's always available. And I will be moderating and monitoring all the chats. And we would require everybody to mute your things so we can have a productive, engagement over here. If you have any questions, just use the chat bar on the side. And hopefully everybody, because Kemaul did volunteer, and basically, hey, he's putting up his time and effort to put this class together. So we want to give him his utmost attention, right? And basically, we just want to basically help the community as well, right? So if you have any questions, comments, or concerns, just use the chat on the side, right? And I'll make sure that your question would be answered, right? And we're going to hold the questions off to the end, right? And for an interactive session at the end, because the first one, and the last one we did, right? It carried on too long. It was like about 5-6 hours, and that was a little too crazy and hectic. So this is the new structure that we're going to follow, hopefully, inshallah. If everybody's okay with that.
Assalamualaikum.
Walaikum assalam wa rahmatullahi wa barakatuh. How are you?
Alhamdulillah. How are you, brother?
All right, not too bad.
Very happy to see you after hearing your voice after a long time.
Yes, it's been a while.
After on the other day's seminar, right? The second seminar.
Yes. So inshallah, we'll try to continue the momentum, right?
Inshallah.
Right. And like I said, you guys, if you have any questions, right, we're gonna let Kemaul do his teaching. He knows what he does. He's a teacher by profession. So I'm telling you, these guys, he's gonna break it down for you in the utmost layman terms for people to understand and comprehend what's going on, inshallah. Right. But if you have any questions, please utilize the chat. We definitely want everybody to mute their mics, right? Cut off all distractions, cut off all your Facebook, your Instagrams, your LinkedIns, your Twitters, right? So at least you are focused, right? Even though this is a free, um, free class, right? We definitely want you to utilize it because there's still value in it. You understand? So let's just hopefully, inshallah, as soon as Kamal is ready,
Yep.
we'll commence. Good. All right.
All
Kamal,
right.
take the screen. Give me 1 second. I'm just gonna make you host.
Yep.
This so you could basically screen share and do what you got to do. Right. Give me 1 second. Okay, make host. All right. So you are now host, my man. Take control. And I'm gonna put myself on mute.
All right. Okay, so thank you once again, everybody, for attending. I'm really excited to talk about the world of stocks, cryptocurrencies, investing in general, goals and strategies and the likes. This is, like I said, an exciting time that we're living in. And we hope to make use of the next 2 to 3 hours in the best possible way. Just a few housekeeping rules. As Waqar has already mentioned, please keep your mics muted. There is probably going to be a lot of people. If we have mics unmuted, the noise factor does affect everything. In addition to that, feel free though to stop me by unmuting your mic if you have an immediate question that can be tackled right there and then that is relevant to the specific topic that we are discussing. Then again, by all means, please feel free to stop me and ask for further clarification. I do want to emphasize that I am not a certified financial analyst, right? My profession is teaching, okay? But the beauty about today's world is that we are learning at such a rapid pace, unlike ever before. The amount of information that is accessible to us gives us that opportunity to learn on demand. And as a result, we can utilize that to empower ourselves as well as others. Let me just see if we have a question. Professional scalp king. No, I wouldn't say that. The organizers kind of put that in because I've had a pretty successful track record since I've begun, scalping. Those of you who are in our group, you're probably going to be familiar with a lot of the terms. Those of you who are brand new to the world of investing, this may seem a little bit overwhelming, everything that is going to be discussed. You may feel like, whoa, I can't, right? That's okay. We want to understand that learning is a process, right? It's about growth and it's not about a bullseye attitude. All right. When I first started and when many of us first started learning, all of it was very overwhelming. It's information on steroids, Barry Bonds style, right? Like you have just so much coming at you and flooding you. You don't know where to go. But at the same time, it's like, man, my 401k is giving me like 5% after fees or 10%. And my buddies over here are making 50 and 60%. It's like, I kind of want in on that too. And that's okay. But I do want to emphasize that this is a process. You are not going to take a beginner level class that is 2 hours or 1 hour or 3 hours or 10 hours, whatever it is, and be a master of these principles, of these concepts of the entire investment world. It does take time, but I do guarantee that if you are diligent and you do take the necessary time to exercise learning and growing as an investor, as a person who reads charts, learns technical analysis, you are going to see those gains, right? You are going to see it. So without further ado, let's just continue. So for the purposes of today, we're going to be discussing a lot of different things. I hope you guys you can type, you can, write, whatever is suitable or easy for you. We're going to be discussing many different concepts, starting with the basics of investing. We're going to dive just a little bit into stocks and cryptocurrencies. I got some questions prior to the class A lot of people still don't know the world of blockchain technology, cryptocurrencies. What is that? Is it something that's viable, and so on and so forth. We'll dive in just a little bit into that. Then we're going to start to look at some strategies and goals, and I'm going to go over the importance of that. It's going to be a little bit cumbersome, but it is necessary for everyone, and I'm going to explain why. We will take a break approximately midway through, 15-minute break just to get a breather, and so on and so forth. And then afterwards is really when the fun begins. We're going to get into the world of technical analysis and charting. We're going to discuss various concepts. We're going to discuss, sorry, I'm just admitting people into the group. We're going to discuss, we're going to discuss various strategies, right? We're going to look at charts. We're going to look at candlesticks. We're going to look at divergences. We're going to look at volumes. We're going to assess how to get into this world of either intraday trading, swing trading, or other than that, all right? And then we're going to look at some live examples using my favorite, how shall I say it, my favorite asset, I guess you can say, to scalp with, which is the cryptocurrency Chainlink. And we're going to look at some of the trades that I've done personally recently, and look at how to execute it, look at entry points, exit points. So be patient. Again, as I said, if it's a little bit overwhelming for you, that's okay. I mean, this is not meant to be easy. If it were easy, everyone would be doing it. But it's not something that is impossible. And I wouldn't even say that it's something very hard. It's just something that you have to give it the time, and you have to allow yourself to grow with it. And most importantly, you have to allow yourself to make mistakes. Mistakes are crucial, and they are vital, and they are important, and every investor feels it, right? When many of us got into cryptocurrencies in 2017, and I know many of you here, if not all of you here, have experienced it, you got into cryptocurrencies and you lost money, right? What you didn't realize was that, well, if I had held on, I could have probably made money. So there are a lot of these different factors that come into play that we don't account for, all right? And so we're going to discuss that to kind of alleviate some of our anxieties. Like, yeah, today my stock is down 10%. Guess what? Tomorrow it might be up 20%, right? So we have to be cognizant of that, and we want to learn, how do I really gauge that, right? How do I look for that? I'm down 5%. I want to sell. I don't want to lose my money, right? That's the feeling. That's the nature of it all. Okay. All right. So any questions before we begin? Just want to give anyone an opportunity. If not, then we will continue.
Yeah, I have a question.
Yep.
Are you gonna also tell us like how to enter and exit a trade?
Yeah, we're gonna look at that in the second half of class. We're gonna look at how to actually establish all of that.
All right, cool. Thank you.
All right, no problem. Anyone else? And by the way, like I said, I don't want this to just be me lecturing. That's one of the most difficult things, especially about remote learning and so on and so forth. Sitting behind a computer screen can be kind of cumbersome. So feel free to interact. I may even throw some questions at some people as we move along, because I do see some students from our main teacher who taught us the other night, who had a class with us the other night. So I may throw some questions at you guys. All right, so if there are no other questions, let's move on. So this might be some really basic. Some of you may have, in-depth knowledge of investing, especially if you are in our group. So this may be a bit of a review, but it's important to establish certain principles as you go along. For some of you, this is brand new, as many of you have messaged me and spoken to me about it. And so that is why I decided to include it. So some basics of investing, right? It's important to assess the following, right? Needs, wants, and goals. So you want $1 million, but do you need it? Your goal might be $1 million, but is it feasible? Does that make sense? It's a rhetorical question. Of course it makes sense. All right. Because we all want to become millionaires and billionaires, right? And probably some of the biggest examples that I can think of are penny stocks, right? Penny stocks are, it's one of those things that everyone needs $1 million. I need tens of millions. Yeah, right. Exactly. The reality is that if everyone has millions and millions of dollars, then inflation would be through the roof, and then the value of our money is nothing, right? So penny stocks is a very good example. A lot of people I've had, and it's usually young people, they come to me and they say, oh, this stock is like 0.001, whatever, you know, or XRP, if any of you are familiar with cryptocurrency. I remember we had a chat group, and I'm not going to mention names, but there was a particular person who was like, yeah, XRP is going to hit like $3,000. It's like, well, it doesn't work that way, right? It doesn't work that way. Have you seen my grocery bill? I have not, but you know, it's interesting that you mentioned that, and inflation is definitely hitting there as well. But yeah, we all do aspire for millions, but we want to set realistic targets, okay? And that is something that we need to be cognizant of when we talk about needs, wants, and goals, right? So in as much as you want a particular stock that's, let's say, valued at $200 to hit $2,000 like it did with Tesla, probability says that that is not going to happen. So investing is all about mindset. It's about psychological emotions, feelings that you get when you pour money into a stock or an asset or an ETF or a cryptocurrency, and you start to panic or you start to feel, you know, this euphoria, right? And so you need to learn how to regulate that and at times mitigate it, okay? All right, so that's the first thing. So as an investor, you need to assess your needs. You need to look at, well, what do I need right now? Can I afford to invest $1,000 and not look at it for the next year, right? And honestly speaking, I don't know of anyone who asks themselves that question. That's the first thing, all right? You want to assess your wants. Well, yeah, you might want that vacation, right? But that vacation might be out of the reach based upon the investment that you have. You need to be realistic. If you have only $100 to invest, I'm very sorry, but that's probably not going to turn into $1 million. All right. And look, there's no harm in understanding that. The sooner you understand that, the better you are. And goals. Now, I'm sure everyone has been watching the fiasco with Dogecoin. Elon Musk has been tweeting over and over Doge. He's been shilling it. Shilling, by the way, means, you know, promoting, kind of like, you know, trying to make something seem really better than it is. But ultimately speaking, Elon Musk has been shilling Dogecoin, right? And people have just been throwing money into it. And so when you don't have specific goals in mind, i.e. targets, it's like you're throwing money into the air, or you're throwing something into the air, hoping that it's going to stick somewhere. Unfortunately, what ends up happening many times in that case is that that particular asset just ends up tumbling. And we're going to look at it, an example from my own personal experience later on. All right. Oops. So another principle is that you must never invest more than you can afford to lose. I can't emphasize this point enough. How many times have you gone in the last week onto Facebook, onto Twitter, onto social media, and somebody says, I lost my retirement fund. Guy lost $100,000. Omar, you know what I'm talking about, right? A girl I saw on one particular picture, she lost $20,000. If you can't afford to lose the $1,000 or $5,000, then maybe you shouldn't be investing it. So understanding your portfolio, understanding your needs, understanding your wants, it's crucial. And that's okay. Look, man, if all you have to spare right now is $2,000, that's okay. Because your mindset and your goal should be growth. And I want to stick that in every investor's mind, in your heart, and your soul. All right, is that growth is your goal. If you stick with that understanding and you get the whole Lamborghini, like, yeah, I'm about to get the Lambos. Yeah, I'm about to, make $1 million or $10 million. The sooner you get that fantasy out of your mind, the better you will be an investor, because you're not going to be looking for quick gains. Quick gains on hype stocks brings people to their knees, ruins them. So establish these principles as a basis for your investing, and you will be okay. You're not going to be one of the suckers who dumped $20,000 into Dogecoin at 9 cents and saw it go to 3 cents, and then you sold.
Or GameStop, or
GameStop,
or AMC.
AMC.
Yeah.
I mean, you know what?
Nokia, man. Mention Nokia.
Nokia. I mean, look, and listen to the anger in the voices, right? Like we've all experienced this at some point, right? And so we need to understand these principles, implement them in our lives, and it's going to lead to better results. And that's what we're looking for. Growth. Aim for growth, Aim for growth, aim for growth. All right, the next principle that I do want to speak about is diversification. Now, this is an important one, and I know, and I kind of feel that it's within the algorithm of Robinhood, of Webull, of a lot of, specifically Robinhood, for a lot of young people. What we've been noticing, and I've been noticing, particularly with our group, even though it's a very small sample size, is that when the market is up 400 points, everybody in the group seems to be down. And what's going on there, right? And that's because we're not diversifying. Now, many people have a misnomer. They have a misunderstanding of what it means to diversify. To diversify doesn't mean that you just have, $5,000 split up between Apple, Blink, Neo, Microsoft, Tesla. And guess what? You have nothing but technology. Yeah, you're diversified by company, but you're not diversified by asset class. And there's a difference.
Absolutely.
Okay? There is a tremendous difference between diversifying between companies and diversifying by asset classes. So if you have $1,000 in technology, but you also have $1,000 in manufacturing, and you also have $1,000 in commodities, and you also have $1,000 in banking or financials or whatever it is, you are now more diversified than the average person. So now you're looking at your portfolio and it's like, oh yeah, I'm down in this sector, but I'm also up in that sector. And that's been happening to a lot of people, myself included. Look, I make these same mistakes, but I can live to tell about it, right? And I can warn others to not make the same mistakes. So don't just go in and jump in on Weeks, on Blink, on Neo, on Solo, and all the EV, right? As soon as Biden passed, or spoke about the green plan or whatever it was with the $2.4 trillion, everybody jumped into EV. Some people made money, some people didn't, depending on what you did. But what a lot of people saw was they got into the hype and all of a sudden their portfolio was down. They panicked and they sold, and now you're down 25% of your initial principal. So you must diversify by asset class. Write that down. If you haven't written that down and you're a newbie and you're a beginner, please write that down. Please don't put all your eggs
in one basket.
Egg in one basket. It's not gonna work out. Trust me. And if it does, well, good for you. But probability says that it probably won't, because new beginners, they rely ultimately on news. By the time it's hit the news, that stock is already up considerably. All right, so you have to understand this. Understanding fee structures. Now, here's the thing, right? If you want to get into trading, please understand fee structures and tax implications, capital gain tax demands.
Kemaul, we have
Yes.
a question of it. Just want to somebody asked, what are different asset classes? So when you were talking about diversifying.
Yes, very good question. Thank you for asking that. So we mentioned, for example, technology is a common asset class that is on everyone's tongue, right? Manufacturing is another one. Okay. By the way, if you, Betty, I'm not sure if you're new to investing, but if you open up let's say if you have Robinhood, you can actually open up the app and you can there's a section that will allow you to look at various asset classes. So there's consumer goods, there's technology, manufacturing, there's finance. You can invest in food, you can invest in healthcare, right? Hospitality, commodities such as oil and natural gas, and so on and so forth. So it's important for you to, as I oft repeatedly state, it's important for you to have a little bit of this and a little bit of that, and don't only have $10,000 between 10 technology stocks. You're not diversified. I'm sorry. Okay. This is very important. Understand the asset class. Sometimes $5,000 the market is a little down, and sometimes the other way around because I'm heavy on one sector. Exactly. Right. And so you cannot, if you're going to be, particularly if you're going to be a long-term holder, and we're going to talk a little bit about what that means, you want to make sure that you're diversified along the various types of asset classes. So that way you secure yourself in the case that one day technology, because look at the trends, right? When technology, when Apple is down or when Tesla is down, a lot of the other technology companies are down as well. So technology, they kind of move in unison. Hospitality they kind of move in unison as well. So it's important to understand that as you go along your path of investing. So going back to the point about fee structures, when you make trades, right? This is more for people who are involved in intraday trading, positional or swing trading. And we're going to go over those things. It's important to understand how much am I paying, right? So, you know, going over the cost benefit analysis, some people might be working with a very small principal. They're tempted to, you know, make a trade, but also be advised, Uncle Sam, he wants his piece. So under a year, you're paying 30%. Over a year, I believe you're paying 15%. Under a year, it counts as income tax, basically. So you have to take these things into consideration. It's work, right? You have to sit down and you have to say to yourself, all right, you know, is this worth it for me? And you will ultimately make the decision that is going to be best for you. High risk, Lau. So to speak about that a little bit, right? How many people come along and, you know, some no name like Dogecoin, for example, right? Or they come along with a penny stock, like, yeah, bro, I'm tossing $1,000 into that. All of my financial aid money, all right? And sure enough, it tanks, you sell, it's like, damn, I don't have 800 of that $1,000 anymore, I'm screwed, right? And unfortunately, that happens with other people. So you be very, you know, investing is about managing risk. That is a mantra, right? Investing is about managing risk. Your job, in addition, your goal is growth, but your job really is to mitigate risk, okay? It is to mitigate risk, all right? Where can I find top 5 asset classes? Samir, to answer your question very quickly, it's not about top 5, it's about trends, okay? So it's like what has been trending most recently, right? Because today it could be hospitality services, right? Tomorrow it could be technology, the day after it could be healthcare, right? So we need to understand that when it comes to investing in asset classes, it really boils down to what is trending currently, all right? All right, so I hope that's understandable about what is high risk, right? What is high risk, and understanding that you must mitigate your risk. Now, again, this goes into the concept of diversifying. If you do have a portfolio with $20,000 and you do want to throw $500 into something that's high risk, that is not necessarily the worst thing, right? Because you're not taking a lump sum, a tremendous portion of your portfolio and dumping into something that's very risky. And what do we mean by very risky? New companies, right? You have a new company, it's a penny stock, you know, there are not much fundamentals behind it. This company doesn't have a proven track record of revenue, right? Or debt to earnings ratio. You know, you want to look at these things. That's kind of beyond the scope of this class, but I'm mentioning it to you guys because not everyone here is going to be a swing trader. Not everyone here is going to be an intraday trader. Some people, and probably the majority of the people who are here, are going to be interested in just, you know what, I just want to park my money somewhere good and watch it grow. And that's fine. That's okay. I think, quite frankly speaking, I think we should all be doing that with some of our portfolio, right? Still in all, you still need an entry point, right? You still need to decide, like, is this stock going to be worth my while? And so what you're learning here today is also going to help you do that, okay? Sorry. Oh, what is Mohammed Imtiaz? Yeah, I'm only using Dogecoin because it's such a classic example for every person that has made money on it. I know other people who have lost money on it. It's just like, it's such a classic example. So that's pretty much why I'm using it.
No. I was not talking about you. Somebody was bringing it up on the chat. So.
Oh, I'm sorry. Okay.
Yeah,
Okay.
all right. Yeah. So I'm monitoring both the WhatsApp chat and it just sticks. So yeah, there's some chatter in the chat about Dogecoin. But go on, continue.
All right, cool. So the last point in terms of, I didn't speak about time length. I'm sorry. Time length, very important, very crucial, right? You need to define your specific time frame that you're working with. And we're going to look at that as we speak about short-term traders, mid-term traders, long-term traders, right? What does it mean to be short? What does it mean to be long? What does it mean to be mid-term? Okay. And this will go into our topic on strategies and goals. All right. So the last point that I want to make, and I think someone is entering. Okay. The last point that I want to make on this slide is patience. Patience. Now, when technical analysis and trading first started in Japan, where it basically assessed market dynamics It was all about patience. It was all about reading how people reacted to certain things. Please be advised, every time you buy, there's a seller. Every time there's a seller, there's a buyer, right? And so you have to understand that, all right? And so just because something drops, that doesn't mean that it's gonna go to zero, right? We need to understand that, because automatically in the back of our minds, we instinctively say to ourselves, well, I'm selling it to nobody, so they'll never be able to sell it again. And that's kind of the way that we're treating it when we panic, all right? So patience is key. And again, it aligns with the very first thing that I said, which is need, wants, and goals, all right? Your aim is growth. It is not for $1 million. You bought Ethereum just now, 5 minutes ago, and you're wondering why it didn't go up 10%. Patience. You bought Ethereum 5 minutes ago and it dropped 2%, and you're like, oh my God, I'm gonna lose everything. Patience, all right? Patience is very key. And of course, with this that we're learning, it also requires a lot of patience. Any questions?
Especially with cryptocurrency.
Yeah, especially with cryptocurrency. And we're gonna talk a little bit about that. Any questions before I move on?
Any questions?
All right. Okay. All right. So stocks versus cryptos. Again, this is going to be kind of basic to some of you, but I do feel that it is necessary for many of our beginners who have asked. All right. So with traditional investing, you have, stocks, ETFs, and mutual funds. The differences are not essential at this point. The adversary, so to speak, is cryptocurrencies. Right. By the way, I'm not downplaying stocks. Okay. I know I do in the WhatsApp group, and that is for other reasons.
Stonks.
But there's nothing wrong with stocks, right? There's nothing wrong with, trying to utilize what you learn in technical analysis and charting for the purposes of trading stocks. That's fine. ETFs as well and mutual funds, it's fine. But in terms of the cryptocurrencies, a lot of people have questions about that. To put it very simply, it is a new form of asset and currency that is available to us today via technology through internet protocols on something known as a blockchain. Now, that is highly technical, and you probably still don't understand anything that I said about it. But the point here that I think is essential to note is that it is a multi-billion, if not multi-trillion-dollar industry now. And that should tell you all that you need to know, right? It is here to stay, right? 2 years ago, the IMF, they did a poll on Twitter asking about what people thought the majority form of transactions or the transaction models would be in 50 years. And 54% of the respondents chose cryptocurrency over credit cards and debit cards, cash, and I forgot what the third one was. All right, so it's important to understand that. The best of the best, of course, is Bitcoin. You can't go wrong with that. It's a scarce asset. Ethereum, I also firmly believe you can't go wrong with that. Chainlink, a lot of people have not heard about Chainlink. Chainlink is excellent. They have entered into the space and revolutionized it. Again, that is beyond the scope of this class, but do your homework on it. AAVE, excellent decentralized finance, look into it. And as you guys read more about it, and I'm sure many people have been hearing about it, the news has been, jumping about news about cryptocurrencies. People are investing in that space. Companies, institutions, institutional money is there as well. Question, AAV is best. Says the man who made a lot of money on it. All right. So cryptocurrency exchanges versus stock exchanges. I didn't list any cryptocurrency exchanges here, but I do have various stock exchanges, Webull being one, Charles Schwab, Robinhood. Now, one of the reasons I did that, the most famous one is probably, or ones are Coinbase and Binance. One of the reasons why I listed the stock ones is I do want to mention, do not buy cryptocurrency on Robinhood or Webull or any of these traditional stock trading applications. The reason why is that you will not own the keys. Basically, you will not own the crypto. So if you wanted to remove it from the platform, you will not be able to do so. So for example, if, Wakar and you, or let's say me even, right? We do some business, I edit a paper for you, I say, hey, I want one chain link as payment, or let's use a better example. I want half of a Litecoin as payment. You can't get that off of Robinhood or Webull, for example, right? You would have to use some alternative method. So I do emphasize that. If anyone has other questions regarding the specific exchanges and how they work, feel free to message me on the side later on. We can talk about that. So now let's get into the meat of everything.
Can I, sorry, can I ask a question not related to stock exchanges?
Yep.
Something a little bit more rudimentary, actually. On the last slide, it said stocks, ETFs, and mutual funds. Now,
Yes.
I kind of understand what a stock is. I gather a mutual fund is like a fund in which, many stocks are chosen to grow over time. But I don't entirely understand what an ETF is.
Yeah.
And maybe if you could just gloss over it quickly, just to give me the basic gist, I would really appreciate it.
So, I mean, it's a very layered question. It's an exchange traded fund, right? It's an investment fund. It's very similar to mutual funds, but I believe it works with something known as an index, which is really formulaic. And it's like a price model that they come up with for the value of this ETF based upon their investments. It's really algorithmic, I guess you can say, based upon a variety of financials. Whereas mutual funds, they typically make plays after hours. The fees are higher. So some popular ETFs, like I think ARK, Vanguard, so when they have that price there, it's not necessarily indicative of one particular thing. It's more indicative of an index, a numerical value that they price, gauge or cast based on all of the other financials on all of the trades that they're doing in the companies that they're investing in. I know that doesn't help.
No, it's okay. I mean, I think I get it. So it's basically kind of like you put your money in it to grow over time, and it has like a varied sort of investment strategy.
Yeah, yeah. I think mutual funds tend to cost a little bit more in terms of trading and so on and so forth. But I mean, you can't go wrong with ETFs, is what I'm saying. Like,
Okay.
ETFs are fine, and you'll find ETFs. Vanguard is very popular. Sorry, that's my heater. ARK has become very popular. I know Motley Fool or Motley Crue, I can't remember the name of it, but they shill. They've been shilling ARK a lot. So those are two of the more popular ones.
Okay, no, that's clear enough.
And also in the chat, it's just want to mention. Also in the chat, we did do some research for you, right? So if you wanted like a layman's term of it on the side, it's also there for you if you want to see it.
Oh, thank you, Wukan.
No problem.
All right. Okay. So moving on. So jumping into, wow, time is flying. We're already 40 minutes in. Oh my God. All right. So
it tends to happen.
Huh?
It tends to happen.
Yeah. Well, originally I was going to timestamp everything, but I kind of wanted this to flow organically, just in case people had questions. I didn't want to shut those out. Right. So it's okay. It's all right. We'll be fine. Yeah. All right. So short term, midterm, long term, right? So those of you who are in the WhatsApp group, you know this, and I've probably asked you this question before. A person comes and says, "Hey, I'm up 10% on, whatever. I'm up 10% on Square. Should I sell?" And I'm just like, "Well, what's your strategy?" Right? And I say that over and over again. What is your strategy? Well, I don't know what my strategy is. Well, that's the problem. Before you jump into investing, you need to formulate a strategy. When you walk into JP Morgan Chase, as I've done before, and you discuss, for example, an actively managed trading fund, they print out like a 50-page document, which is basically your strategy, amongst other things, fee structures and contracts and so on and so forth. But it's a strategy, and you will sit there and you will talk with that financial advisor for 2 to 3 hours. So if you're willing to do that with a financial advisor, why aren't you willing to do that with this? You have to formulate a strategy. Are you a long-term holder? If you are a long-term holder, it shouldn't matter that Square is up 10%. If you are a long-term holder, it shouldn't matter if Square is down 10%. Does that make sense? All right. So you need to define your strategy. Otherwise, you will be in chaos. 1 minute you're buying, the next minute you're selling, right? The stock goes down, you sell, it goes up, you buy, then it goes down, you sell, and you're in chaos. You need to define your strategy. When I first started, I had a very simple strategy, and it yielded me some pretty decent gains, although it wasn't monumental. I basically waited for stocks that were down 10%, and I waited until they went up 10%, and I sold, right? We also have to understand that a lot of these rules and regulations, they're arbitrary, right? They're not set in stone. You can come up with your own way, right? And your own strategy that works best for you. What works best for you may not work best for someone else. Okay. I think did we have a question? No?
Not that I know of yet.
So, it's very important for you to determine, am I looking to get into the short term? If you are looking to get into the short term, then you have to have precise entries and exits. All right. You need to have, if you got in at a certain price and you say, hey, I'm up such and such, what should I do? My question would be, well, what was your exit? Did it hit your exit? Oh, I don't know. I didn't have an exit. Well, there lies the problem, right? Everything must be clearly defined. This is work, guys. Growth requires work, right? It doesn't matter what it is. In life, that's just kind of the way that it works. All right, but it's worth it. And if you clearly define these things, you will be successful. So midterm, typically, it actually means not 3 to 6 months, but it actually means more like 3 to 9 years, right? So you need to, if you're a long-term person, if you are a long-term person, definitely you have to do your due diligence in terms of getting into particular stocks, but you put your cash into a portfolio, you buy your stocks, and you don't look back. Don't go looking at your phone every 5 minutes. I know we all do it, right? I violate my own principles all the time.
Absolutely.
These are fundamentals, right? It's like you have to be disciplined, patient, going back to the point of being patient. You have to be willing to say, hey, it's there, I'm not going to look back at it. Because honestly speaking, how many people actively look at their 401ks? Not many. I don't think most people do. I mean, some probably do, but most won't. Right? All right. So short-term, midterm, long-term basically boils down into the next topic, which is intraday, positional, swing trading, and scalping. Right? So intraday trading, as we all know, is, your day-to-day. I mean, you may enter into, a position right now. I mean, I've got, when it comes to scalping, I've gotten into trades right now, and 5 minutes later, I'm exiting. Okay. Sorry, we're getting somebody who's entering into the room. Mohammed Aidi, are you okay, bro? Notice you're in and out. Is he there? Are we good?
No, I don't see him.
Okay. All right. So positional trading is actually the long-term holder, right? You're probably holding it for a longer period of time, based upon a certain position that you've already established and a certain exit that you're looking at much later down the line. All right. And we're going to look at how that actually happens over time, but it's not intraday. Swing trading is basically kind of like what it sometimes will crash. Okay. Swing trading is basically what it implies is that you basically go from a low up to a higher point. So many of you have experienced that, is that you see a stock price is down like 10%. A lot of people are saying, oh, don't jump in, like this stock sucks, right? But actually that might be the best time to get into it. Little do we realize. Now, of course, that is dependent. It is actually dependent on a lot of other factors, right? Because sometimes it's down 10% and it just keeps falling, right? Now, one thing that I didn't mention here that I often mention in the WhatsApp group that is extremely crucial for you guys to know. Look, if you have a great company and it's down 10% and you bought in 10 shares, whatever, right? And then it sinks another 5 or 10%. Sorry, I'm getting another. By the way, I know people are coming in. If you could put your name as your display, so that way we know. Like, Zoom sometimes gets hacked and stuff like that. So if you could kindly make sure your name is on display so we know who we are interacting with.
Purge them on Zoom. Purge them on Zoom.
It had to be known, right?
It had to be.
So so it's called the, and I completely forgot to put it in here. It's called the DCA method. The DCA method, which is a very basic but very empowering method, is the dollar cost averaging method. And if you see that the price is dipping, but it's a sound company, it's a good company, and there's nothing, groundbreaking in terms of negativity where the stock is concerned, what you probably should do is buy more. And I know that sounds radical to some people who are new. It's like, well, come on, the stock, it's down 15%. Why the hell would I buy more? Well, you're trying to average out your costs, because when that price reverses, you're just compounding gains. Little do you realize. So DCA, dollar cost averaging, is an Microsoft fantastic example. If you look at the Microsoft chart, it has very, the pullbacks are not radical, but the chart over time is just this slope that just goes up, right? So imagine if you were DCAing consistently, because that's the way that the market works, series of going up and down, okay? So DCAing is a fantastic method. And, even if you're a long-term holder, it is, it's worth it to pay attention to the market sometimes, just so like, hey, you know what? Caterpillar is down 15%. Like, whoa, and some ignoramus comes along and is like, yo, man, you should probably sell. Like, no, I should probably buy. Oh, it dropped another 5%, man, sell. No, I should probably buy. And when you add that knowledge, or when you add this method with technical analysis, lethal combination, because you'll actually know specific entry points, right, that you can jump into, and it's even better for you. Okay, and yes, it's basically doubling down. So once that reversal happens, like a lot of people saw with Bitcoin, right? Bitcoin, hit 20K. A lot of people, had friends, they bought in at 12, 13K. It dropped, 9K. Okay, I'll buy more. 7K. Okay, I'll buy more. 6K, 3K. Okay, I'll buy more. Because eventually what happened? Boom, reversal. So now all of those buys that you had from 3, 5, 7, 9, all of them are now making gains. So DCA is a very valuable. Yeah, okay. Someone did sell Bitcoin at 6K. Don't remind me, all right? Don't remind me. And look, you know what? Shoot, I'm guilty of this. If I was smart, which I'm not the smartest person in the world, if I was smart, what I should have done when it was experiencing that dip, right? I should have just bought more. But people get into your head, right? When you're a beginner, and look, these hedge fund guys, they're all preying on us. These people with the technology and the years of expertise and the billions of dollars, they're the ones who are preying on the common folk. You panic. You have to exert that patience. Use the DCA method. It is highly, 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 highly recommended, especially for your long-term holders.
Especially like if you have a small amount to invest, right? Yeah. You would basically, hey, put up recurring investments about whatever you're willing to afford. Basically $50, $100 a week, a month, whatever it is. So at least you know what you're going to be DCAing right into the actual, the volatility.
And those small gains, it's like, when we talk about needs versus wants, I mean, do you really need, the Gucci bag this month, right? Do you really need the expensive vacation this year, right? So it's about assessing these things and formulating a firm strategy and goal. I know this isn't sexy. I know this isn't juicy, right? But these are the foundations that you lay that will make you a better investor. And then when you start to apply the more complicated stuff, right? That's when the gains really start to add up. That's when the gains really start to pile up, right? So I strongly encourage that as a method. We stay Gucci though, 100%, right? That's my boy Nomi, all right? So I mentioned a little bit earlier about the tax rules and regulations. I'm not an expert on that. We had another class on that with a tax expert, or actually we're having one, right, Waqar?
Yeah, we're having one on February 14th at 3 p.m. with Atiti Vora. She's gonna basically help us, about capital gains taxes. So she's gonna help us with that, inshallah.
Yeah, it's good. Like all of information is power, right? It's excellent tool and resource. Attend, you will benefit. So that way you have more equipped to make better decisions where investing and trading is concerned. Managing risk, as I mentioned before, major part of your strategy and how to manage your risk. That is something that we're not going to go over really today. I do want to make mention of it so it's on everyone's radar. There are ways to do it, but it really is beyond the scope of the class. There are a plethora of ways that you can manage that risk. There is a plethora of ways and tools and resources that you can use to mitigate risk, maximize rewards, and how to do that, right? There's a whole thing about that. Perhaps at a later time or a later date, we can get into those technicalities. And the last strategy and the biggest strategy are your technical indicators. Your technical indicators are going to be what really sends that trigger, what really tells you it's time to buy or it's time to exit. And that's going to be in our second half of class today. Louis Vuitton, right? All right.
Gucci,
so moving on. It's time for a break. All right. We've
awesome.
I've condensed everything. Yeah, I'm not doing too bad on time. I've condensed everything in under an hour. So let's take a quick 15 minutes. Is that all right with you guys?
That's perfect. All right.
So when we come back.
Okay. Before you guys go, yeah, go ahead. Come on.
Yeah,
go ahead.
I'm sorry. We're gonna be jumping into this part. This is the meat of it. All right. And when we sit down, I really need everyone's attention as we're gonna go into some really in-depth stuff.
All right. Just to let you guys know before we go for this break, right? If you have any questions, please have them, in the chat, or you're more than welcome to write them down, or approach any one of us, or Kemaul himself, right, with those questions. But we definitely do want to answer all your questions, right? So before we go for the break,
9:05.
Yeah, let's do 9:05. 9:05 sounds good.
Yeah.
9:05. Yeah, great. Sounds good. We'll be back, right? So take your 5 minutes, 15 minutes, and we'll be right back. Sounds good? Perfect.
Yeah.
Awesome.
Good.
Great. Oh, just to let you guys know, right? You guys can definitely converse amongst yourselves, right? Especially in a group as a collective. If you guys want to get to know each other, if you don't want to take the break, just want to let you know about that, right? Go ahead. Do what you got to do.
Everyone come back lit. He said the class gonna be lit, so make sure y'all lit too.
All right, just a quick question, guys. How, if you guys, is anybody still here? Just wondering, what do you think about the class so far?
It's great.
Great, right? Yeah, that's a teacher for you. You know, he knows exactly what he's doing. He has a set plan. He has everything. You know.
Really looking forward to the second part of the class.
Oh yeah. The second part is the juiciest meat. You know, so waiting for that too. So
I was very impressed that he actually has the class, the material itself that he's presenting, the way he communicates, mashallah. I'm very impressed.
Alhamdulillah, right? Yeah, that's exactly, you know, you know, what we're trying to do is basically inform and teach everybody else about the terms and tactics that we use. You know, if anybody has any feedback, any questions that you want to let me, basically you want to like, you know, anything you want to cover in upcoming future ones or anything like that, do definitely let us know. You know what I'm saying? So that's the ultimate goal, is to help the community out, you know, obviously.
Just wanted to say we appreciate the class. You know, it takes a lot of effort putting it together, so we do appreciate it.
Not a problem, man. All the props go to Kemaul by himself, right? We are just little cogs in the wheel.
I love the presentation too. It's really, I like it.
Yeah, awesome.
Yeah, it's cute.
Yeah.
The break one.
Yeah.
The toilet.
Who is that mastermind behind this break?
It's probably Kemaul. That's funny.
All right, so there's a couple of questions in the thing. Let me try to answer them. If there's anything we need to have, what is it? I will be interested to see how to predict via charts. I think for Parikshit, you should be paying attention to the second half. Hopefully, Kemaul would you know, focus on that part afterwards.
Yes, sir.
Absolutely. In the second part, right?
Sure.
And Imtiaz, you're funny, man. Love you, brother. I definitely had I would definitely advise everybody to create a TradingView account. It's the the free version is good enough, right? You don't have to go paid unless you're going to do using, I believe from I believe it's 3 or 5 indicators. So you definitely want to sign up with a TradingView account. If you're doing with cryptocurrency, you definitely want to sign up with Coinbase. New York, unfortunately, doesn't allow us to register with Binance, and Binance was my specific platform of choice before this whole thing. And after that, I've been using Coinbase, and I've been limited. And I have a KuCoin account. I had definitely want to get join up on those. KuCoin, Gemini. Gemini allows some of New York, some assets in New York, right? But if you're in Texas, you could use Binance.us, you could use Coinbase, you could basically use many of the other platforms as long as you're outside of New York. Many of these international brands, right? Binance, Gemini, Bitfinex or Bittrex, right? KuCoin, and there's a couple other platforms, right? Yeah, so that's for that, right?
What does being in New York have to do with having Binance? Sorry, I wasn't aware.
Okay, so Binance.us won't let New York registrants allowed to trade on their platform.
Yeah, same for the
didn't know that.
Texas as well, by the way.
What was that?
They have some limitations. Same goes for the Texas. I don't think we can trade while you are in Texas, or at least there are some limitations.
Right. So every exchange has their own like rules and regulations. And unfortunately, me being living in New York, I can't speak for everybody, but they don't let me trade, right? In New York, right? They won't even let me register. I was using Binance before. That was my ultimate platform. That's where, you know, everything was available, right? But due to these US regulations, they converted over to from Binance.com to Binance.us, and they're limiting. And now, because I'm a resident of New York, they wouldn't even let me register for that. So,
hey, Waqar, that's not the reason because you are a resident of New York, because they cannot handle your big account that big that they cannot handle it. So they just block you out.
Well, that's their problem, right? That's not my problem. That's their problem then.
They need to call it Binance.Florida because it works down here.
They cannot handle your money.
Yeah, they don't want it. You know, like, hey, I'm giving it to you, and you guys don't want it. Okay, fine, no problems. You know, so they're lost, brother. They're lost. You know?
So while we are on the break, right, guys, one quick comment. One quick comment.
Go ahead.
Can you guys hear me?
Yeah. Yeah, I'm hearing.
Yes.
Yeah. So I was saying that, there was a glitch in between. So I was saying that there is a quick comment, and Kemaul, he did mention.
We lost you, buddy. Imtiaz, we lost you, buddy. Or did I get lost? Which one is it? Can everybody else hear me?
Yeah, we can hear you.
Okay, so
you good.
okay, cool. So we lost Imtiaz. All right, I was just making sure.
Oh, okay. Wow.
Yeah, we lost you, buddy.
Yeah, it seems like, okay. That's okay. So I was just saying that crypto, no crypto on Robinhood, not at all. Stocks have a lot of gotchas. I can give you a very quick example, and again, we can talk about that. So if you have an order to buy a stock at $5, your order will not be executed. If you look at the micro seconds or just keep looking, your stock will be bought when it's $5.02. So, or $5.03, something like that, not at $5. I use Fidelity, I use Charles Schwab, and trust me, I monitor it very, very closely. Fidelity is the first one to trigger your order, then Charles Schwab, and Robinhood is the last one. You order at $5, and they will buy, actually, they will buy at $4.98 instead of $5 and keep those 2 cents or 1 cent or 3 cents, whatever it is. But they are playing that game. If you monitor very closely, you will see what I'm saying.
All right. Yeah. Okay. So I've also seen that as well, right? And on Robinhood, your orders don't execute at the price that you are, especially if it's a market order, right? And yeah, it won't execute at the time that you want it to execute. So they do make if for that example, $4.98, and you wanted to buy at $5. you would end up buying it at 502. So you're losing it 4 cents, right? It doesn't seem like a lot for one share, but if you have thousands or a couple thousand shares, it definitely adds up. Just to quickly go back to the chat, so we could continue this continue the class, right? So how Mohammed said, what about using a VPN? Unfortunately, we can't use a VPN. VPNs are definitely advised to do trading, right? But you could bypass your IP, but you won't be able to bypass the KYC, which is know your client, where they actually ask you to basically send documentation of the state of your residency. So, you know, if you're like Binance would want you to take a picture with your ID in front of in a camera, with your ID placed this way with a written note, right? So they do very technical, weird stuff that we might not be used to, right? Like, for example, if you wanted to open up a new bank account, it's very easy. It's like, hey, listen, you know, you put in your information and it's done. But unfortunately, like, you know, these exchanges like Binance, KuCoin, and all these other places, they would actually want a physical picture of you with a handwritten note of the day that you basically, when you sign up, right, that they want that information, right? They just want to know who's dealing with what, right? Just to answer your question, so a VPN, yes, it would work, but not if you're a resident in the if you're a resident in a place that's only accessible to New York.
Okay, all right, and we're back. Hope everyone had a good break. But let's get right to it. Imtiaz, I heard what you said. Very good point. Those of you who are trying to trade in some way, shape, or form, Robinhood tends to have a delay. And it, if you notice when you place the order and it says the order received, there's that circle that just keeps going around and around and around. And that delay is enough for your order not to be filled. And so you end up having to, get a new entry point. And depending on the type of trader that you are or the type of investor that you are, that makes a significant difference because, 10 cents or 20 cents on the dollar is, a tremendous difference when we're talking about a large position of 1,000 shares, 2,000 shares, 3,000 shares, depending on how much the underlying asset costs. So that is a good point. I do not advocate that people use Robinhood. I think they're evil, but that's another story for another day. All right. So before we actually get into the meat of our session today and learning some of the great tools of technical analysis and charting, I want to use myself as an example of what not to do. As I mentioned earlier, it's important for you to always have a strategy. It is also important for you to stick to your strategy, right? Just because so-and-so, Joe Smith down the block, comes to you and says, bro, I just made, $10,000 on this. It's pumping, the price is pumping, it's up 200%. Doesn't mean that you should violate your principles. And one of the principles that I advocate for is say no to parabolic rises. Say no to parabolic rises. Parabolic rises is exactly what it says. The price shoots all the way up, but then of course it comes all the way back down. So what happened to me last week? Well, I was or maybe 2 weeks ago, I was on a really great, run. I was doing my scalping thing. I was making maybe $100 per trade, $200 per trade. And everyone knows this because I'm in the group and I got 150 people following whatever it is that I say. And I'm calling out the entries and the exits sometimes. But what ended up happening was Dogecoin happened. Now, when Dogecoin happened and it's up 500%, literally in one day, this thing called FOMO kicks in, right? Fear of missing out. Now, I know Dogecoin is garbage, right? I know that I'm not going to waste any time with it. But damn, XLM was up 47%. Huh. I looked at the price And it's like, well, maybe this is it, you know? And I jumped in a huge position that resulted in a $1,500 loss, violating my principles of risk management, violating my principles of saying no to parabolic rises. Look, what you're looking at in front of you is a trading view chart, and we're going to get into trading view momentarily. But for the purposes of this discussion, I just want you guys to look at this chart right now. What you see in front of you, if you notice the height of the price, 38 cents, right? That long green kind of candle looking thing right smack dead in the middle of the chart, that is where your teacher decided to enter. Big mistake. No fundamentals, no technical analysis. I didn't draw up a chart. I didn't look at time frames. I didn't look at, any, divergences or volume. I didn't look at anything. I just said to myself, 47%, maybe this is it. Maybe it's going to be just like Dogecoin. And what happened on the very next candle? I mean, you're looking right at it. For those of you who know how to read a chart, is Nomi here? Nomi, can you tell me, based on this chart, it's the 1 hour chart, what happened the very next hour?
Is this a double top?
Technically, no, but we don't even need to go that far, right? It tanked. It tanked. There's no ifs, ands, or buts. There's no complexity about this. Price tanked, dropped like a rock. And I just shook my head. I'm like, why did I do that? You want to get rid of your money faster than anything, just simply jump into a parabolic rise, right? Some of you, we're in group chats where like somebody comes along and they're like, oh yeah, stock is up 50%, I'm jumping in. It's like, okay, that's fine if you're going to jump in, but are you jumping in because it's up 50%? Or are you jumping in because the Fibonacci level is going to rise to 1.618? There's a difference. And so if you're going with hype, hype dies. Everything that is hyped eventually dies. And those parabolic rises are no different.
Right. So, and just to reiterate that confirmation, right? The whole Redditor thing that was going on last week or the week before, right? These were parabolic rises that weren't supposed to be there, right? So even if they're, people got in, at $300 and they're like, oh, hopefully it'll go to 500 as expected, and, guess what happens? It doesn't go the way it was supposed to. That's the whole thing that, you want to be aware about as well.
Yeah. So moving on, and I just wanted to share that personal experience with you, because one of the things that we also have to understand, you're going to make mistakes, even with technical analysis. Technical analysis is not foolproof, right? Just because you found, 2 or 3 or 4 indicators that tell you that the price is going to rise, it doesn't necessarily mean that it will. But what you can do is you can make informed decisions. And jumping in on an asset just because it's up 50% is not making an informed decision. Make informed decisions, and the overwhelming majority of the time, you will succeed. You can't go wrong in that scenario. All right. So I just wanted to share that with you guys. If you don't learn anything from me today, please learn this, and please learn from those who have already experienced it if you have not experienced it yourself. All right. So now the juice. All right. So we are now going to get into the technical analysis and charting aspect of today's class. It's going to cover a myriad of topics. From, as you see here, we're going to start with trading view. Waqar has previously mentioned about utilizing trading view charting, which I highly recommend because it is extremely formulaic, extremely helpful with a variety of tools. Learning about candlesticks and the patterns, learning about the Fibonacci extension and retracement levels, and trend lines, how to establish those, how to establish supports and resistances. We're also going to go over those things. EMAs and crossovers, more broadly, I should say, is MAs, EMAs, SMAs, and crossovers. But nonetheless, EMAs is our focus because it is something that I use. These are my strategies. It doesn't necessarily mean that it will be yours, but we're going to go over those as well. Volume indicator, right? The volume indicator is probably, in my humble opinion, the most important technical indicator, in my humble opinion. I think that the volume indicator is the most important, and I will explain why. We're going to look at the RSI and timeframes. The RSI, also known as the relative strength index, we're going to look at that and how valuable it is in terms of technical analysis. Again, it is not foolproof, but it is a pretty strong indicator in my humble opinion. Channels and patterns. When I say patterns, I mean triangular patterns. We're going to go over and we're going to look at some of those. How do they, help you make decisions? What is an upward channel? What is a downward channel? What does it mean to break the channel? Does breaking the channel automatically mean that you should exit the position? No, there are certain things that play into that as well. Bull flag versus bear flag. We're going to look at those two types of patterns on the chart, how to recognize them. What does that ultimately mean? Divergences, very, very, very useful tool, especially in crypto trading, which I prefer personally. Bullish and bearish divergences, what are they? How do you recognize them? By no means are those the only kinds. There are multitudes. There's a multitude of divergences, but you do not need to, and I want to emphasize this point. This, I've just went off on like all of these different types of technical indicators. You do not have to use all of them. It is impossible for you to use all of them. What is necessary is for you to use maybe 2, 3, at most 4, right? And you look for those, and you look for patterns on the chart utilizing those 3 or 4 technical indicators, maybe 2 at a bare minimum, right? So once you can combine those, and we're going to talk a little bit about this concept of confluence. Once you combine those technical indicators, it's going to help you to make a better decision. You don't have to run and try to say, all right, I need the 7, 12, 21, 14, 55, 50, 200, 150 MAs. I need them all. I know that's too much, right? That's too much. You want to keep it simple. You want to keep your chart clean. All right. The concept of using stop losses, we're going to talk a little bit about that in terms of swing trades and positional trades as well. Sometimes you're going to get stopped out. It happens. You take the loss because losses are part of gains. Okay. And of course, the last topic is mitigating risk, but we may not get to it because it's highly technical and complex, and it might be a little bit above us, but we'll see. I'll gauge based upon the class. All right. So the first thing that I want to do is to look at TradingView. All right. TradingView.com. If you are not familiar with this website, please go to it right now, because what I'm going to kindly ask for everyone here is to actually, as we go through the charting, I want you guys to have your charts opened up as well. Don't worry about feeling lost. It's really intimidating. When I first looked at TradingView, I was like, yo, this is like in depth. I don't even know what 90% of these letters and numbers mean, right? But that's okay. There's a starting point. It's about growth. Aim for growth and you will succeed. All right. One of the important parts of TradingView is the ideas section. All right. I love the ideas section because it has a bunch of different authors who they talk about different things. This guy right here, Alan Masters, I just immediately noticed him. He's not bad. He tends to post some pretty interesting charts. You're gonna find some pretty decent authors on TradingView that help you to see a broader picture of an underlying asset. You can simply type in the asset at the top. So for example, if I type in BTC USD, and I prefer Coinbase since that is primarily what I use, and I go here, okay, and I click on ideas, scroll down, and you have a lot of different, and look who's here, right? Alan is here. In fact, I'm going to actually read his chart later on and see what he says. Just looking at the top authors, Bitfink, excellent in my humble opinion. Wyckoff Mode, love him. He's excellent. Vince Prince. One guy who is not here is Mark P. Markets. If you guys look him up, he has a Twitter. He's excellent. Oh, I shouldn't have deleted that. I should have left it. Definitely go and check him out. He has some pretty interesting points of analysis. He talks a lot about risk management. I've learned quite a bit from him about risk management, how to mitigate losses, how to maximize profit based on probability. He goes into those things. Excellent resource. So TradingView, in a nutshell, it's a tremendous resource for you guys. I highly recommend it. If you're too lazy to look at specific technical indicators and you're more of a numerical person, you have obviously a basic chart here, but you can actually click on technicals, right? And you can then look at specific time frames, which we'll go into a little bit later, but it gives you, and again, this stuff is really intimidating. But as you learn what these things are, they're going to begin to make sense. Okay. Like this, like what does this even mean, right? This is all, what the hell is this? Okay. But again, we're going to learn about those things. So what I want to actually do, any questions about this, by the way? It's important to mention, I still don't have the paid account. I'm still using the free account. There is also an app you can download and you can look at charts on your phone. The application is pretty good. I love it, right? If you have a wide enough screen, you can go and you can look, right? And you can, if you're, at work or like, you're away from a laptop or a computer, definitely, open up the application, look at the chart yourself, and you can make decisions right there and then. It has everything on that app. You can draw lines, you can draw charts, you can do it all. So I highly recommend it. If you're going to do any kind of trading and you don't have a TradingView account, just stop trading. It's just, I don't see how that's possible. Don't recommend it at all. Okay. All right.
I have a question.
Yep.
So are you using all these indicators to scalp?
So very good question. I am not. So as I mentioned before, I'm not using every single indicator, right? On a particular trade, on a particular move. I don't know, anyone that does. Sometimes they'll conflict. You have to look at certain things that are more weighty and more meaningful than others. We're going to go into some of those examples so that way it's clear to you. But definitely you never want to just say, all right, I have 10 technical indicators. Let me plot all of them. I want the Bollinger Bands. I want the RSIs. I want the stochastic. I want 6 EMAs. I want, no, it's not going to work. You're going to get too much conflict and you're going to be indecisive. Hope that helps.
I have a quick question as well, sorry.
Yep.
You mentioned that you use mostly the free TradingView account.
Yeah.
But you said you should definitely register and make an account. I guess what I'm wondering is, what are the benefits of having a registered account versus just using the free one?
Yeah, I'll be honest with you, it's just my laziness that I haven't signed up for the paid account. The paid account gives you more tools and you can plot more indicators on the chart simultaneously, right? So I do recommend getting the paid account. It is something that I'm going to get myself, right? Joshua, excellent point. Scalping does equal capital gains taxes, but any trade under a year equals capital gains taxes, right? So, you have to devise your strategy, right? Create your strategy. If you're not fundamental enough and you're not sound enough in your trading and you don't know enough about this, then you might want to stay away and hold off and just learn a little bit, keep your stuff in the account for a year before you start dabbling with it because of the fear of capital gains and all of these other things. Right? Again, as I mentioned before, it's a process. You want to paper trade. In our WhatsApp group, we advocate that people paper trade first. Take a year, take 2 years. Me personally, I've been learning for the better part of 2 years. My mentors have been learning for 3, 4, 5, 6 years, right? And it takes some time. It's not something that you can snap your fingers and learn overnight. Don't take me wrong. People don't make money.
Kemaul, I just want to basically just touch a base on Omar's thing, right? Right now you are a trader yourself, conditioned and well versed in this space, right? And you're still not using a paid account. So just to let you guys know, you don't need a paid account, right? And please let me know if I'm wrong. right? At least to get yourself known. You don't need to go out and buy this account, right? I'm trading for you.
Yeah, I mean, I personally don't advocate that you get the paid account right away.
Right.
You need to familiarize yourself with the chart. You need to familiarize yourself with the tool, which you can easily be done with the free account. And then eventually, you know, you're going to segue into the paid account to get more access to different tools, to look at, you know, different trends and so on and so forth. All right. So is that clear? Does anyone have any questions about that?
Yeah, if anybody has any questions, don't be shy. Just say, if you don't want to come on the sound, the utilize the chat box. We're always monitoring that as well.
Okay. All right. So having said that, before we begin, I want to emphasize one thing when it comes to, or actually, you know what? I'm going to keep that for later. I'm going to keep that point for later. So let's look at the chart. All right. This looks like a hot mess, right? Like, what am I looking at here? Okay. So immediately what I want to show you guys is these bars, these icons here, and at the top, right, are where your focus needs to be. All right. So here is the asset. Okay. Time frame. Now, time frame, extremely important. I do have that down for later on when I talk about the RSI, but I'm actually going to talk about it right now to preface the first topic of the candlestick, because it means nothing without understanding time frame. So time frame is essential. Why is it essential? If you want to swing trade, right? If you want to swing trade, or if you want to scalp, you need to work with small time frames. All right. In trading, it's known as the macro versus the micro. Looking at the macro level, as we click here, right, we have the daily, the weekly, and the monthly. These are known as the macro level. All right. The micro level is when you get a little bit lower, but more so towards the minutes. All right. Now, again, everyone has their strategy. My personal strategy when it comes to swing trading or when it comes to scalping is to focus on the micro and looking at the specific time frames of the 1 hour, the 15-minute, the 5-minute, and the 1 minute. I'm going to repeat that in case you want to write it down, right? When it comes to scalping, when it comes to intraday trading, or when it comes to swing trading, you need to focus on the micro. My personal preference is looking at the 1 hour, the 15-minute, the 5-minute, and the 1 minute charts. All right. This is because it's going to help you see the movement that's happening, right, much more quickly. All right. And it's going to be more reflective of where the price action is going to be going within that day, right, which is ultimately your goal. Okay. So if you guys are looking to get into this space and you're looking to do this kind of trading, this is where you want to keep your eyes, focused on the majority of the time. Now, if you guys are positional and you want to look at a bigger time frame, then you're going to move out or as we say, I'm going to use a lot of trading terminology here. If anything is unclear, please let me know. You're going to want to zoom out, right? You zoom out to the 1 day. You can also look at the 1 week, and you can look at the 1 month. Okay. And these are going to help you build an understanding of the macro. How has the price action been doing for the entire year? How has the price action been doing, on a week by week basis? Once the price action breaks a certain level, on the macro level, where is the price going to go? Now, this really matters to options traders. I don't know if any of you here dabble in that, but if you do, and you want to set options, contracts that are a year out or something like that, then you're probably going to, you're going to want to look at the macro much more than you're going to look at the micro. All right. So don't open up your chart and you want to jump into something and you want to exit something within the day, and you're looking at, the weekly and you're trying to get a picture from there. No, focus more on the micro. All right. The minute and all the way up to the hour. 4 hours tends to be, some people use 6. Again, these are arbitrary, right? It doesn't mean that it's set in stone. Some of you may go away and you may say, all right, you know what? I want to use the 4 hour. I want to use the 6 hour. I've been getting some consistency by using those. That's fine. I'm just saying this is my personal preference. For taxes, do the exchange give you 1099 at the end of the years? Yes, very good question, Samir. Just as an FYI, if you guys do happen to use Webull or Robinhood or any one of those exchanges, they will give you a tax document at the end of the year. If you are using a cryptocurrency exchange, for example, Coinbase, if you do not make more than 200 trades for the year, they will not give you a 1099 document. So you are therefore responsible for the record keeping. Now, the records are there, but now you have to print them out. You have to make sense of them. There are actually applications. I've used it. I used it last year that integrate the API from Coinbase into the website that then downloads all of the transactions to show the net gains or net losses. If anyone wants that information, message me on the side later on. We can talk about it. I can forward that information to you. A couple of people had already asked me and I sent it to them. All right, so moving on. So time frame. Time frames is extremely important. If macro, longer time frame, right? 1 day, 1 week, 1 month. Micro, you're looking at intraday, right? 1 hour, 15 minute, 5 minute, 1 minute. Okay, so that's the first thing. The second thing that we want to look at, and I'm going to zoom out a little bit to my favorite time frame, which is, or one of my favorites, which is the 15 minute. Okay, that's just my personal favorite. It does not necessitate that you guys use the 15 minute. For swing scalping, it's best to follow within the hour as opposed to the whole. Correct, Muhammad Rahman. All right, so the candlestick. So the charts all start with these things. By the way, can you guys see my mouse?
Yeah.
Okay, great. So they all start with these things. These are candlesticks, the actions of buying and selling on a given day or a given time frame, I should say, right? In this case, we're looking at the 15 minute, okay? That is gonna paint a picture of where the price action went in that particular time frame on that particular candlestick. So if we're looking at this one right here, I want you guys to look at the top here. And what you see is OHLC, right? And I know some of you know this. Can I hear from Hasib, right? When we talk about OHLC, what are we looking at?
So open, so it depends on if you're looking at a red candle or a green candle, I should say, but open is for that time frame, the starting price, I guess. High is how high up it went, the price.
Yep.
Low is the lowest, and then close is the end price of that time frame.
Correct. Okay. So that's gonna, OHLC, that's basically it. Where the price opened up, so about 25.92. Okay, so up here, started all the way at the top, right? And then the high was 25.92. The low was all the way at the bottom, okay, at 25.06, and the close was 25.32. Now these are important as you look at the candlesticks, because where the candle opens and closes relative, and write this down, just giving you guys these pointers, where the candle opens or closes relative to the prior candle and its support lines is crucial. All right, so where the candlestick opens or closes prior to or relative to the prior candle is extremely important. All right, that is going to establish some, not always, but some type of momentum. All right, moving on. So the candlestick has these 4 elements. And again, you don't really need to do the work. TradingView does the work for you. So you simply look at the top. And there are different types of candlesticks, right? You have bearish candlesticks and bullish. If you're not familiar with what the terms bearish and bullish means, bearish simply means that price action is going down, whereas bullish means the price action is going up. The bulls are all those traders and investors. They want to bring that price, all the way up. But on the flip side, there are a lot of people who actually want to bring the price down. Maybe not by sole intent, but they want to exit from the trade, or they want to get out of the asset because maybe they're losing or something like that. All right, because remember, for every action of buying, there is an action of selling. All right. So
just want to mention, right? It seems like it's a great scalping entry point right now. Just saying, just putting it out there.
For Chainlink,
yeah,
I'm kind of curious. I mean, you might be right. You know,
yeah.
It's actually, you know what? I'm kind of curious. Why do you say that?
Why do I see that? Because you know, I just see the trend right here, right? I mean, I'm not a plotter, but I see that it's down at 24.375 or whatever, and the highest was in the past 15-minute trend, right? So I'm saying if you focus on the I would see that, like, I don't know, I can't show it to you right now on this thing, right? I would find that as a great entry point as a scalp. That's just my opinion from what I'm seeing. Now you are obviously much better than I am, right? You probably would be able to see it a lot better than I can. So
yeah. I can't verify that because the chart isn't speaking to me enough.
Okay.
There are some other things that I would like to see before. So another thing that I do want to emphasize is you do not have to be hasty. Patience is key. Patience is key. Patience is key. A good trader, and I'm not saying I'm necessarily a good trader, but a good trader is one who looks for confirmations.
Confirmations, absolutely.
Good trader is one who looks for confirmations. All right. So in the case of, for example, this underlying asset, Link USD, you want to look for, because the trend is clearly bearish.
It is.
Right? What does that mean, Sadia? What does that mean? When we say that the trend is bearish, what does that mean?
When the trend is bearish, that means that the prices are going down. The sellers are in control.
Yeah, the sellers are in control, right? So if the price action is bearish in this instance, you need something that is going to reverse that trend for a specific time frame that you're looking to enter and therefore exit upon. All right. So I see we have some comments. I don't see that yet. Morning Star. Wow, Sadiq Hoke is we got some pros here, bro.
All right.
That's good. I like it. I like it. A lot of red overtaking green in that picture. Yes. So Mohammed Rahman, to your point, you know, is it the time for us to enter? Based upon what I'm seeing, I would have to do a little bit more based upon my strategy. Again, other people are, you know, they're a little bit different. Again, these are arbitrary rules. As you go along and you learn more about TA, you're going to try to employ somebody else's strategies. Okay. All right. So moving on.
Can I ask you to a little bit explain those graphs, those lines? There are different, I mean, red, yellow, and things like that. What are those lines?
Yes. So those are the EMAs, and I'm going to actually go into those not too far from now. But definitely we are going to get into those. Those lines are crucial and they are very important. All right. But thank you for raising that question. Okay. So the candlesticks. So do we understand these candlesticks? Right. That, you know, all that it is telling you what the price action looks at for that particular time frame. In this case, it is the 15-minute period. All right. So moving on.
So just to clarify, the each candlestick is representative of 15 minutes, or this entire graph here is 15 minutes?
Very good question. This each candle is representative of a 15-minute period.
Oh, okay, thank you.
Yes. All right. Any other questions? Okay. So in addition, we also touched on patterns, right? The overall trending pattern, right? And what we're ultimately, or what we have come to a determination of, is that this is an overall, it looks like, based upon this time frame, that we have a bearish pattern where where the price action is decreasing. Now, one of the useful tools that we utilize that help us to establish patterns is is this tool right here called the trend line tools. All right. Now here you have a bunch of different things that you can use. Okay. And the very first one is the one that I tend to use. All right. You could change the color scheme. I have it on yellow. You can change the thickness of it for clarity purposes. All right. So one thing that I want to probably look at, and you can start to draw. All right. And this can kind of start to establish, it's not going to be the neatest, right? You guys see that?
Yes.
All right. So this is important because this is going to show you certain points, right? And this is going to show you the overall trending pattern. This is known as an upward channel. All right. When you have an upward channel like this, and let's say you got in down, let's say you got in somewhere around here, right? And you know, you kind of came up, came down, you came up, you came down. Why does this matter? Let's zoom in. This matters because you're looking for where the price breaks, right? So now if this candlestick would have dipped down here, right, coupled with some other indicators, you might have told yourself, well, you know what, it's time for me to exit. But instead, you're noticing that the price is not breaking. So let's say, you know, you're somewhere over here, right? You see this trend. And so remember, all of this hasn't happened on the paid version of TradingView. There's actually a tool where you can rewind the time. It's really cool. It's amazing. And you can actually separate. So you can, like, let's say start from here. Okay. But the pattern is like this. So you draw, you elongate the line to see how far the pattern may go. And you're looking to see if the price action will break below that line. Does that make sense? Do we understand what I mean by that? Does anyone have any questions with regards to that? Okay.
Kemaul, can you do it again?
Yes.
Do it.
Do you want me to show you how I drew the line?
Yes, please.
Okay, gotcha. All right. So by the way, you can use this nifty little back button to go backwards or forwards on any action that you took or that you previously took. All right. So I'm gonna actually remove these trend lines. So you go over here, you got your trend line tool, click on trend line, and you might, let's say, I'm just for the demonstrative purposes, just gonna plot them like that. Not the best. Let's fix that. Okay. All right. So
is that any specific points we are taking it, or just randomly taking that range?
So I'm randomly doing it right now just to show you what upward channels look like. And sorry.
Go ahead.
Yeah, and the reason why you're looking for upward channels, this by no means this is a precise entry or exit. All right, just to clarify that, right? But what I'm trying to show you here as we zoom out, right, is that this is an important point in this chart on the 15-minute, because what it ultimately will determine is, well, maybe I need to stay in the trade because fear overtakes the mind. You start to get anxiety. You start to say to yourself, well, you know what? I need to leave because the price dipped down here, right? Let's say you were here. Let's say you got in at the very top over here, for example, and the price dipped all the way down here. Does that necessitate that you exit the trade? The trend, the upper channel says, no, this is a technical indicator. Does that make sense to you guys?
I think that you know, I mean, from what my understanding is, it's like, how did you pick that position to put that line on?
So what I'm trying to do here is simply show you what an upward channel looks like. So you could have, all of this may not have existed, right? And you could have gotten in, let's say you got in here, right? But because the channel is moving upwards, you draw this instinctively. Okay. And
so basically what you're saying is that you're drawing a line on the tops of the candles.
Correct.
Right. As a resistance level, right? Or a support level.
We're going to get to supports and resistance in a moment.
Okay.
What is important for to understand here is you're looking at the tops and the bottoms of the wicks of those.
The wicks, correct. So the tops and bottoms of the candles, each candle an upward channel.
Yes. So let's zoom in a little bit. Let's say you got in at this point right here. Okay. And it is the opening is 25.73, but then you drop down, right, to 25.53. Now that 20 cents difference may not seem like a lot, but if you're dealing with a substantial amount of money, you might start to get nervous. But again, that does not mean that you have to exit the trade. What you're looking for is to see how well these candles hold this trend, or I should say how
To
well the
clarify,
trend.
in theory, you would want to see a few of these rises and falls in this pattern
Correct.
over the course of the day.
Correct.
Because I mean, just because it's rising in that pattern, like you still don't know when the turn is going to happen, right?
Right.
When it's going to start to drop.
Right.
So you'd have to establish a pattern over time of it going up and down in that.
Correct. And
that
because
way.
you're in an upward channel, because you got in here, but the price has been moving upwards, right? Well, let's say you got in at the very top, right? But you look what happened here within an hour. Okay. Because you got in at the top, it doesn't, and it started to go down at the bottom, you default. Granted, of course, we're talking about other indicators coupling with this, but this is one type. All right. You default with the upper channel. Look, I'm in an upper channel. These other indicators say I'm good. So you ride that and you wait. And sure enough, despite the fact that you got here, it came up, it came up, it came up, right? And so it's important to, look at those things. And if we had to, let's say you got in at around 26.64 and for me, 26.97, if I'm trading 30 cents for every dollar on 400 chain links, for example, that's good enough for me. I'll take that and I'm out.
Okay, so you're saying when the what you call the bearish candlesticks start to break out of that line that you drew, then you know it's making a turn, basically.
Yeah. So this is another example. And again, these lines are not going to necessarily be so precise. They don't always have to be, right? But you do want to get some, this is not such a great example. Let me look for a better one. Oh, this is a good one. All right.
And if anybody has any questions, because I know this is the part where everybody gets confused.
Yeah.
So if anybody has any questions, just don't worry about, unmute your mics and please speak up.
All right. So now, look over here. What is this known as? I just mentioned it. Anyone can tell me?
Channel.
Say that again.
Upward trend.
Upward trend.
Upward trend, upward channel, whatever you want to call it. It's ultimately the price action is going up, right? So to Omar Khatib's point, right? He mentioned here that you want to look at, well, is it going to break? All right. So here it kind of broke, but it went up again. Now, if I'm a trader at this point, I'm probably not going to exit, right? But you could, because you maybe a little bit of anxiety struck in, but you have significant gains here from, let's say, the low of 2048. You made it to, that's $2, man. That's nice. I'm probably, if I'm looking at my my other indicators, I'm probably long gone at that point. But at this point now, because remember, when you're drawing this, you're probably extending it with the hopes that that's what it continuously does, right? But when you get here, now this looks way out of bounds now, right? It looks way out of bounds. That might be your cue to exit, okay? And it's okay, because at that point, if you're here, you've already given, or you've already gained, I should say, enough of a gain, right? You've gotten almost $2 per chain link. If you have a sizable position, no harm. Now, again, this does not mean that that's what you should do. I'm showing you what an upward channel looks like. Because in your charting, as you guys are going to move off on your own, in the coming days and weeks, as you start playing around with TradingView, this is what you need to sit here and do, is literally like, all right. Oh, here's another trendy tool before I forget. This magnet. The magnet puts you right on spot to the bottom or the top of a wick. So it's going to hit naturally. It's, I don't even have to do it. It does it for me. Okay. So like, I'm going to look here, for example, and honestly, this is what I sit and do like sometimes all day. Like, I'm just like, okay, let me see where I'm at. Okay. Let me look here. And I start looking for, what am I looking for? Trends. I'm looking for channels. Let me see where the channels are. And you can do this with any stock, any asset, it doesn't matter. You're looking for those symmetrical lines. You're looking for breaks upwards or downwards, depending on what it is that you're trying to achieve, and you're drawing trends. All right. So that's a little bit about that. Does that make sense? Is anyone confused? I don't want you to think that this is a be all end all. It's not. The purposes of me showing you this is that this is a piece of the puzzle. It's not the entire puzzle, but part of your repertoire, part of your tool, part of your arsenal are the trends, right? Because people are, human beings, we panic, okay? We panic and we want to jump in and out. As soon as something goes up 10% or down 10%, 5%, 2%, whatever the case may be, we want to make rash decisions, right? But that's not, if it's going against the trend, that may or may not indicate that you should enter or exit, okay? But that's not.
I have a question.
Yes.
So as we're drawing these trends, how do we use this to determine what entry and exit point should be? Because, I mean, we may not have the time to sit there and look at it, over the course of the day.
We're gonna go into that. I'm just drilling this idea in your head, so that way it's there, that you recognize it the minute that you open up a chart. All right. Now, we're gonna get to that point about entries and exit points momentarily. Definitely don't lose that thought. Is that a bull flag? Whoa, Joshua Bolton, inverse hammer. I like it. I didn't spot one, or I wasn't paying attention for a bull flag, but we're gonna get into that.
Kemaul, right where your cursor is, that upward channel just to the left of your cursor. Keep going. Right there at the very bottom of that upward channel, you've got an inverse hammer, which is classic potential upward direction.
Yeah. And that's a good point. I would have liked the bar to be, or the candlestick to be a little bit higher.
I'm talking about the upward channel. So if you keep going to the left with your cursor.
Sorry.
Yeah. So at the very bottom of that upward channel.
Oh, this one. Yes, the inverse hammer. Yeah, we're gonna go
inverse hammer.
I'm gonna show you guys a basically infograph with some of these. So Joshua is pointing out certain things on the candlesticks, that you have certain things like dojis, inverse hammers, bullish hammers, bearish hammers, all these different types of candlesticks that signal to you. They're called technical analysis signals that signal to you that some change is about to occur, right? And we're don't worry, we're definitely coming to that. I do want to move on, but as long as you understand the concept of what a candlestick is, how it works, opening, closing, highs and lows, as well as what upward channels and downward channels look like, that's our job is done. All right. So now, do we have a question? Got it. Okay, great. All right. So now moving on. So you guys have been talking a lot about entries and exits, looking at, how do we determine that point? So the next thing that we're going to look at is known as the Fibonacci extension and retracement tool. It is one of the most powerful, in my humble opinion, it is one of the most powerful tools that you use to establish your points that you're looking for, those entry points. It is an estimate. It is by no means the be all end all, but it is an estimate, and you get it. Sorry, we have somebody coming in here. Okay. On the left side, you have this tool. Okay, so you merely click on it, and you have a lot of different tools here. You're looking for this one. All right, you're looking for the fib retracement. Okay, and so if you are looking for example where price falls, what you do is you go from the bottom. Now again, I have this magnet right here clicked on, so it's gonna enable it for me. And you're looking for the top of somewhere, right? So you're looking for the next point. So now let me explain what's happening here. Let's say you're somewhere here. You see the price falling, right? And you want to see how that price is going to continue to fall. Okay. You're going to pick the lowest point. And again, this is my strategy. This is my style. It does not necessitate that anyone else uses it. You may have a different format. And you choose the highest point. And look here on the right side, you have all of these points. This is the 15-minute, or actually, you know what? Let's use the 1 hour. Let's go to the 1 hour. I'm sorry. I do want to emphasize that usually when I do this, I do it with a 1 hour to establish my Fibonacci levels. So let's go back. Let's go back, and we're here. All right. So you take the bottom, you go to the uppermost part, which is somewhere over here, let's say. Okay. Because you notice the price is falling. All right. Price is falling. And let's zoom in. And over here on the right, you have price points. You guys see that? Is this clear to everyone? It might not be so clear because it's in gray and white. All right. And then you start to look, you start to zoom in. Okay. And you start to look at, remember, we started somewhere here. All right. So now, if I'm over here, right? Boom, price hit the top. We start to go down. Boom, price hit the top again. Whoa. Right? My spidey senses ring. Okay. I'm hitting that Fibonacci retracement tool. All right. I'm going to the top and I'm saying to myself, where is this going to fall? Approximately, where is it going to hit? And what is my entry point going to be? So instinctively, just for brevity's sake, I'm going to say, I'm going to aim for an entry point at 26. Now, this is a technical analysis point that I do want to make. Rounded numbers usually, not always, usually operate, and you want to write this down if you are taking notes at home or you're typing, rounded numbers usually offer some type of support or resistance. It is a psychological zone, all right? And normally what will happen is that the price won't break that level right away, right? So it'll bounce off of that level and will back up. Or on the flip side, if the price is moving up towards the 26 area, such as, let's see, like here, for example, it does break it, but I don't want to waste too much time looking for that. Oh, here's a good one. Like here, notice like we struggled. Oh wait, that's not a rounded number. All right, whatever. Point is though, it works in the opposite direction. Is usually it rejects the momentum, it retraces back again. So you want to take that into consideration when you're doing your trading, all right, or when you're doing your scalping. We have. Can you repeat this again, please? Okay, where are we? Na'matullah. You didn't hear something.
Yeah, can you just again? Can you show me how did you draw this graph? I mean, I lost.
Yes, let's go back there because this is extremely important. So, Na'matullah, we're pretending that we're over here, right? The price fell here. We've been in an upper channel this entire time, and all of a sudden, the price starts to break that channel. Okay.
Yes.
That momentum seems to be dipping. Okay. So now what we want to do is we want to plot what is known as our Fibonacci retracement and extension levels, which helps us to see support and resistance lines. What is a support line? One of Jewel's students, can somebody please explain what is a support line? Nomi, Omer, if he's here, Hasib, Zaman.
A point where it most likely will not go below.
Okay.
Or your demand starts increasing after that point.
Yes. So it's basically, as it says, the support line where the buyers, whoever bought there, they're not necessarily selling there, right? They're holding on there. Okay. Now, of course, that support line may break due to an overwhelming majority of sellers, right? On the flip side, the resistance level. What is a resistance level? One of Jewel's students, or anyone, if anyone knows.
Where people tend to sell off at that point.
Say that again?
Or people tend to sell off at that point.
Correct. Okay, correct. So, the bears are fighting that line. They're like, we don't want you to get past this point. We're going to keep selling to make sure that you don't get past that point. All right. So, Na'matullah, what we're doing here is we're pretending we're at this candle.
Okay.
And the way that you do it is you click on Fibonacci. I'm sorry, you click on this. It's not labeled here, but you go to Fib retracement. All right.
Okay.
Go to the bottommost point. Now, here's the question.
Kemaul, you're on the 15-minute, not 1 hour. Is that okay?
Good eye. All right. Now, here's the question. Okay. Here's the question. How do you choose a point? Like, why don't you go way back here somewhere? Does
Well, I
anyone
mean,
know?
something very realistic to close to your, I mean, the area of, I mean, say for example, within a day, 2 or month or whatever. I mean, not historical information, I believe. Is that right?
Exactly. No. You're 100% spot on. Thank you for sharing that. You want to use more recent action because you're an intraday trader. You're looking at daily price action. You're not trying to assess the macro. Stick to the micro, right? So you want to use a more recent point, right? In looking where there was some kind of reversal. So you may use here or you may use here something closer to your time frame. So my personal choice is to look at the 1 hour. All right. Oops. Why is it not sticking? Okay. Okay. That's my personal preference. Again, don't necessarily have to take that. Okay. So now we're in on the 1 hour. All right. And we're looking at this price action, I should say. Okay. What I'm basically going to do on the time frames, as the time goes by, I'm going to look at the 15-minute, the 5-minute, and the 1 minute, as I mentioned earlier. Based upon this chart, just on a very, cursory level, actually, let me zoom in. I am probably going to look at, let's say, the 26 price entry. All right. Now, why would I do that? Well, I'm just looking for a quick entry and exit. And sure enough, we hit it here. We go down here. That doesn't necessarily mean that I want to exit that trade. Okay? Because there are a variety of other indicators that you will rely on in order to make your decision. But sure enough, what ends up happening, guys? What ends up happening to that price?
It goes up.
To what?
To 20, almost 27, 26,998.
My entry was 26, let's say. My exit is 27. That's $1 for every link token that I bought. Again, if you have a sizable position, ironically, this is one of the trades that I made, right? If you want to exit and you have a sizable position, you probably made maybe $150, $200 because you want to less your fees. Remember, I mentioned about fees. You want to use that, right? You want to say, okay, I'm out, right? Because for me here, historical price matters on the lower time frames, right? We didn't break here. I'm not going to risk it. Okay. When you have consistent, you're battling the all-time high in this case, or you're battling, or you have notable resistance here, why fight it? Take your dollar and go. There's no pride in this either, guys. I mentioned to my mentor the other day, I'm like, man, I only made $70 on that trade. He's like, did you lose? I'm like, no. He's like, then you won. And you won. So there's no machismo in this. There's no like, yeah, to the moon, the price action is going to go up 500% and whatever. Forget all of that. That's out the window. When you came into this class, if you came in with that understanding before, you were ultimately leaving with a completely different understanding. Take your wins. All right.
So absolutely. And I just want to reiterate that, there's multiple different mindsets, right? If you want to take it to the moon, that's a whole different aspect, right? This is one of those, Kemaul's actually very well known in this stuff, right? This is a different strategy that you could implement. There's holders involved, there's, long terms. This is another strategy, just saying that.
Now, again, this is not the be all end all. I'm merely showing you the Fibonacci retracement and extension tool so that you are adding to your repertoire. By the end of today, you're going to have a bunch of different things that you're going to be using. You're going to be cross comparing. You're going to be employing. Some of you are going to be hitting me up like, yo, did I do this right? What if I combine this with that? All of these things, it's going to come. This is a recipe, so to speak. All right. But this is one of the most important ones. Now, there is another way that you can do this. All right. And Jewel students, you know what's coming next. And it is the trend lines, right? And how do you establish trend lines? So with the trend lines, basically, the way that you want to do it, or the way that we go about doing it, this is like really hard to plot. So like if I go here, right, you go to horizontal line, and to get the precision, it takes a little bit of work, right? So scrap all of that. What you do is you go up here where candles are. I'm giving you guys a foolproof, easy way of plotting your trend lines, okay? And you go to line. Ta-da! It's an epiphany, all right? And now you have a very simple way of doing your trend lines. So you go, boom. And what you're looking for is a drastic change or a series of drastic changes, all kind of aligning with one another, right? For you to choose that as a trend line. And that matters in terms of price entries and exits. This is the way that you would go about doing it. Now, the question is how many...
I'm sorry, sorry to interrupt, but what was the change you just made to change the way the graph looked? I didn't quite see it.
That's fine. When you go up here, next to the time frame, you click line. Or you click whatever the icon is, right? And you
got it. Thank you.
All right. Okay. And if any of it, I'm not sure about like Windows laptops, but Mac has the ability to split the screen. So if you're like on a MacBook Pro or Air or something like that, you can actually do that. So if you want to plot these charts while we do it, more power to you. Practice makes perfect. That's how we're growing together, guys. As a team, as a community, the goal with this is that we establish enough growth where our group, if you have 150 traders, all with sufficient, not expertise, but sufficient trading knowledge, where you're able to recognize entries and exits, oh my God, sky's the limit, or at least growth is. All right.
Growth is definitely the limit, bro.
Yeah. So going back to the trend lines. So how many do you want to target? I mean, you could do, maybe 3 on the hourly. So I might put one down here. Okay. Oops. Matter of fact, let me go back. I'm going to take that off. So I'm going to go here, right? And then I'm going to zoom in on the 15-minute, and I'm going to do that again. Right? There goes another one. Let me see. You got one like right here. Okay. Now, immediately, what I'm noticing that there is a lot of noise going on here, right? But I kind of want to take one more. That one looks good. Let's take this one. All right. And then what you do is that you go back into candles. Ta-da. You guys see that? All right. And so this is one of the ways that you can kind of establish. Again, it doesn't have to be precise. To be honest with you, I didn't look too closely at it. I was just randomly pushing them on there. As you go along, you play around with this a little bit more, and you start to see where the areas of support and resistances are. Now, immediately what I'm noticing is that, if I'm here, let's say in the time of the day, I'm here, somewhere here. It's February 21st, 10:45 in the morning. I'm noticing there's a lot of price action here. One of the beautiful things about cryptocurrency, in my humble opinion, is that it has the volatility and the volume, right, to make your entries and your exits worth it, right? Unlike stocks tend to move a little bit slower, okay? And it doesn't have as radical of shifts, right? And crypto is 24/7. So if I want to scalp at 10 o'clock at night, I mean, some of you have been in the chat room, it's like midnight and I'm still scalping, or 2 a.m. and I'm still scalping just because, like, for the fun of it, just because I see an entry point and an exit point. I made $30 the other night and I was so happy. I was like, yo, $30, bro. That's sushi money.
Oh, that's gas money, bro.
It's a win. That's the whole point. It's a win.
Right.
Did I maximize my profit potential on that? No. Could I have made more? Yes. But the fact is that I didn't lose.
The funny thing is that, these small wins are the most important things because, obviously pennies add up, small wins add up too as well. That's the whole thing you want to do.
Absolutely. Now, my point about this is if I'm somewhere over here in this time of the day, where were we? 10 o'clock in the morning or something like that. I'm noticing there's already quite a bit of traffic going on here. So I'm saying to myself, maybe it's a good idea to take an entry point somewhere along this line, right? And just wait it out. And sure enough, right? If you notice, and we're going to get to these are the EMAs. We hit this point, even below it. Again, don't panic. Remember, it's not about precision, okay? So, if you did get in at 26 or 20 or 25, 80, whatever the case is, wait it out. Let's say you did get in at this green candle at the bottom, right? Which is a low of 26. All right, cool. But look here. I mean, it went all the way up. Now, here's the thing. It went up 68 cents. My trend line says the psychological support is at just below or around 27. Honestly, man, if I have a sizable position, I got 400 tokens in on this, and I make 68 cents per, I'm out. I'm not even waiting for it to go to 27 to test it. Now what you could do is set a stop loss, which is extremely important. That's a different topic, but I'm just showing you guys how this works, right? Is that your whole idea is in and out, in and out, in and out, in and out. Unless you see something else that develops it to the point where you want to say, I want to stay in a little bit longer, right? And you could do that. Or the momentum is so strong on the fall, right? Like here, where you're saying to yourself, well, you know what? I want to get in a little bit lower. And there's nothing wrong. Risk management. It's not worth it for me, for example. It's not worth it for me to get in at this point, let's say here, right? Why? Because we already tried all these times here to break 27. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times we tried on the 15-minute to break 27 and we couldn't. So now we're going down, right? And I'm saying to myself, I should probably set it. Again, this is risk management. I should probably set it a little bit lower. This is very important, guys. When we talk about resistance, when you have your asset constantly trying to break the next zone of resistance and it's not breaking, chances are, again, not 100%, chances are that it's going to break further down than it broke before. So I may get in here. All right. You guys see that? Okay. So this is another tool that you can add, aligning supports and resistances. I personally rely more on Fibonacci levels, right? I personally rely on Fibonacci levels. Sometimes I'll throw in trend lines just to, approximate maybe a different entry point. But most of the time I'm on Fibonacci levels. And it's one of the best tools that you can use to get your entries and your exits, okay? Now, any questions about Fibonacci or the trend lines?
Yes, Habibi Kemaul, can you do the Fibonacci level on the 15-minute one more time?
You want the 15-minute? Sure. So you go here. We were looking at, okay, this right here. Do you see it? Muhammad Aidi?
Yes.
Muhammad Aidi, right? All right.
Yeah.
So you click on Fibonacci retracement, right? Now this is when the price action is going down. We're assuming that we were somewhere over here and the price broke down, right? So now you're trying to say to yourself, well, it broke the channel.
Yeah.
It broke the channel. Remember, we just spoke about upward channels and downward channels, okay? So now you're saying to yourself, well, probability says that the price action might, dependent on other factors, okay? Probability says that the price action might actually go lower. How low? We want to estimate what that looks like, okay? So let's zoom in a little bit here. Go to the bottom. I don't know, hard to see, okay? And then go all the way to the very top, which is like right around here, okay? Do you see that, Muhammad Aidi? And
yes,
on the right side has areas of either resistance or support. Okay?
No.
All right. And so what you want to do in those instances is you want to pick your point depending on how, and we're going to talk about volume in just a moment. You want to pick your point depending on how the volume is moving and other indicators, what they're telling you. All right. So this is that tool. I'm going to leave this up for a moment because it's going to cover our next topic of EMAs. Now, I don't remember who asked. Somebody asked Kemaul, what does these lines, or what do these lines mean? The red, the yellow, and the white. These are known as your EMAs, also known as your exponential moving averages. All right. So what are moving averages? Moving averages are designed into two types: simple moving averages and exponential moving averages. I only focus on the exponential moving averages. What is the exponential moving average? The exponential moving average is basically the average price, okay? And you may want to write this down. The exponential moving average is basically the average price of the previous candles on a specific time period. All right, on a specific time period. So our teacher, Jewel, actually gave us a script that he designed himself to utilize 3 time periods: the 21-day, the 55-day, and the 200-day moving averages, EMAs. That is what these lines indicate. The red is 21, the yellow is 55, and the white is 200. Okay, so going back again, the moving averages, or in this case, the exponential moving averages, they are an average of the candlesticks on the previous time period that we're looking at. So if we're looking at 21 days, we're looking at the average of the 21 days. Now with EMAs, exponential basically means is that they give more precedence, or more preference, I should say, to the more recent candles. None of that matters. All that matters to you guys is to know EMAs is one of your best tools. It is one of your best tools, okay? And one of the reasons for that is, if we zoom in, and Jewel students, what do we have going on here? What do we have going on here?
So golden cross or golden cross?
Yeah, we
golden
have.
Cross.
So I'm going to mention 2 things that you guys want to pay attention to, right? You have something known as the death cross, and you have something known as the golden cross. Okay, so what is the death cross? Is basically when one of the lower EMAs descends below one of the higher EMAs. All right, so for example here, the 21-day dropped below the 55-day EMA, right? Golden crust.
Isn't that like a beef patty
Can you
place?
repeat that, please? What's
yes,
that?
Yes. So the death cross is when one of the lower time framed EMAs, in this case on my chart is the 21-day EMA, it descends below one of the higher time framed EMAs. In this case, we're looking at the 21-day and the 55-day. So the 21-day, the red line, dropped below the yellow line. What happened around here at about 26? How far did we go? About 25.50. Do you see that?
And it started going up.
Well, first it dropped.
First,
right?
Yeah, right.
First it dropped. That's the initial. Now remember, it's on the lower time frame, so the movement, the price action is only going to be very recent, right? It's not going to necessarily be reflective of a much more expansive time frame, right? But obviously something else happened here, which you can zoom in and out on the 1 minute, on the 5 minute, and you can probably piece together maybe something else happened along those lines. Now, something else happens here, right? What happens here is
the golden cross.
Is the golden cross. So you had
the
one
red
of
line goes lower.
Say that again.
The yellow line, it's bad, and when the yellow line, when the red line goes. Oh, I'm so sorry, man. I didn't know my mic was on.
Go ahead, bro. Go ahead.
That's
You were
all right,
doing
man.
good.
No, you were in a
You were
rhythm.
doing good. You were doing good. Go ahead.
You were doing good. Honestly, what matters here is to understand that once the red line goes back above, right, the yellow line in this instance, that is known as a golden cross. You are anticipating price action in the upward sense, in the upward movement. Okay, and so sure enough, that's pretty much what happened. Although it pulled back down, and something else happened over here, but other indicators might tell us. And I don't know, I don't quite remember what happened in this particular instance, that we rode up even higher. So you want to combine, you want to start looking at the different time frames. Zoom out on the 1 hour. Oops, that's the 2 hour. Right? You might want to start looking at the EMAs here, right? To start to gauge and to predict. Look, I mean, just more recently, this is where we are currently, price action, 24.56. We had a, what is this?
Yeah.
Death
Come
cross.
on.
Death cross. Get a death cross.
Death
What
cross.
happened?
Death cross.
What happened?
Price drop.
Price drop. That's all you need to know.
What Death cross do, bro?
Know me, don't worry, man. This week we're gonna chill. You and me. Don't worry, man. We getting together. All right. So anyway, I don't want to bombard you with that, but what I want you to understand is the necessity. I don't want to say the necessity, but me personally, I feel like it's a necessity, is utilizing these EMAs. EMAs also typically work for supports and resistances as well. So I always have them up, right? You want to have, and honestly, I don't think anyone, I'm sure, Sadiq, I know you were, it seems like you have some knowledge. Joshua, it also seems like you have some knowledge. I don't think there's a trader out there who would just disregard EMAs, right? If you're new to the world of trading, I really feel, even if you're not, even if you're an experienced trader, I really feel EMAs are a useful tool, and they're, you know, it's probably something that you should pay attention to. So
my scalp king, your holiness, how do you tell the difference between the death cross and the golden cross?
Okay,
it's not clear to me how one.
So what you look for is the red line descends below the yellow line for the death cross. All right. So you kind of, the way that our teacher Jewel actually, you know, mentioned it to us, is that the larger EMA is crushing the lower EMA.
Okay.
You understand? That's the death cross.
Okay.
All right.
Show me golden cross.
So when we looked, where was it? I think it was on the 15-minute. Let's go back to the 15-minute. When we looked around here, this area right here, we get a crossover, right? Where the red EMA, in this case, the 21-day EMA, went above, right? Went above the 55-day EMA. Sure enough, we saw some price action where our low, our swing low, went from 25.59 all the way up to 26.
But it seems that this data comes in after the fact.
So okay, very good point. Now, from my experience, they don't always come in after the fact.
Okay.
I've noticed that happen where it does precede. Now, they are, by and large, EMAs and RSI and all of these things, they are lagging indicators, right? But they are tools that you utilize in your repertoire, right? For further price action, right? So you may notice. Now, Joshua, what ends up happening is that you could tell that the crossover is going to happen. Because at some point it does happen, right?
They're so close.
It's so close. And so basically what traders say is that the EMA starts to kiss. Right? And so based on how it's moving, you can tell like, yo, a death cross is about to happen. A golden cross is about to happen, right? And so you want to use that. And definitely, guys, spend the time, go online, research some videos more about, and these are not the only ones, there are others, right? But this is just a personal preference. You can look at other types of golden crosses and death crosses, right? And they'll be to your, definitely a powerful, I think, in my humble opinion, I think it's a powerful tool.
Yeah, I appreciate that, Kemaul. That's good.
Definitely. Nizar, you had a question.
Yeah, forgive me, I'm a novice. I'm looking at the program right here, in the trading view, and I'm just not seeing, again, forgive my ignorance, where do I click to make the EMAs actually?
Oh, good question.
appear?
I can get to that part. Thank you for reminding me because I would have completely left that out. All right. So how do you access technical indicators? You go on TradingView. Look at the top here. Do you guys see it? Indicators and strategies?
Yes, we see it.
Click on it. Now I have Jules indicators pre-plugged. There's a way to share it. I can't remember how, but I'll definitely inquire with him in case you guys want to use his EMAs.
It seems like you could just try to copy that right there. I don't know what that is. The two brackets. I don't know. Yeah, that or okay, source code. Yeah.
Yeah, I mean, you could put in the script yourself, but it's so technical that I just want to
right. Okay, go.
share it. Right.
Yeah. I would definitely advise if I would if Kamal, I'm pretty sure Kamal has a platform already, and then Julia already has a platform on TradingView, right? So I definitely would advise you to follow them on TradingView as well, right? Because
yes, you follow him as well.
Right, TradingView. Yeah, TradingView is actually like a social media type deal.
Yeah.
Right. Yeah. Where you can follow each other as well.
So Nazar, to answer your question, and to anyone else who was wondering, like, come on, where the hell do you get these EMAs? You can, and again, you don't have to rely on those specific EMAs. You can type in EMA and you get a whole, like, you got a bunch of stuff that comes up here, right? That other people have developed in their own scripts that you can use. I mean, you can type in, before I was using this one, 20, 50, 100, 200.
That's exactly what I was using before too.
You're welcome to use that. It was, I found it to be effective as well. But I haven't relied on it as much in scalping, to be honest. Can you share the source code? I'm gonna try to create. Oh, yes. I mean, if you want to take a image, hold on. I got a bunch of questions. Or actually, Zahir, can you ask me that question? Because we're kind of running out of time here, and I got like a whole bunch of stuff to share. All right.
Yeah, just now when Wakar mentioned the brackets, and you had the code open at the bottom, and it was like, EMA open parentheses.
We'll share that out in the group. We'll
definitely share that out.
Right.
All right.
So that's not an issue. Don't worry about that. Right.
But
so if you have any questions or like about that stuff, right, we'll definitely share it out and we'll get it for you.
Yeah. Let's move on. All right. So that's a little bit about EMAs and crossovers. Is there any other questions about EMAs and crossovers? Okay. All right. So far we've learned a little bit about trend lines. We've learned a little bit about EMAs. We've learned a little bit about candlesticks, crossovers, Fibonacci extensions, and retracements. Oh, by the way, for the Fibonacci level, if price is going up, right, you do the exact opposite. You flip the way that you plot it, right? So before we were looking, where were we? I think we were here and here, right? Yeah, no. We were here and here. So let's just use the 15-minute as an example in the interest of time. If the price is dropping significantly, right? Let's say here is a good example, okay? What you may want to do, I'm sorry, if you want to look at the price going up, I'm sorry. You want to look at the price going up. So you take, let's say you're over here. You notice the price fell here and you're over here. So what you do is you go from the top and you go down. You guys see that? Is that clear to everyone? Okay. And that's how you would estimate where the price points are for supports and resistance when the price is moving up. All right. And you do the same thing. You look at the price points. All right. Where do I want to get in? Where do I want to get out? Where am I looking at potentially, for the long run? Do I want to long this? Do I want to wait a day or two before I exit out based upon what I'm seeing? Right. As an example. Okay. I do want to mention, or actually, you know what? Let me not mention that yet. Okay. Another point that I want to make. At the bottom here, what do I have here, guys? Does anyone know?
Volume.
Volume. In my humble research, and some of the other traders in the group can correct me if I'm wrong. One of the most important, if not the most important aspects of any kind of trading is volume. When you have significant volume going up, you're probably gonna go, where are we going? Where are we going? Where are we going? Up, right? All right. Volume is an extremely important tool. Now, volume comes into play, in my humble opinion, on the smallest time frames to look for trend reversals, right? Where you see A lot of buying and selling going on here. Okay, for example, where you might see trend reversals happening. Volume is your friend. Use it, right? Use it and look for where it's not foolproof, but look for where you have significant volume entering. On TradingView, there is another tool. Oops. You go to indicators and you simply type in volume and you click on volume. For those of you at home who are plotting your charts right now, please do that. You need to see volume. All right. You need to be able to see volume. Okay. At the bottom, this line right here is also an EMA. To enable this, double click, go to settings, and click volume MA. And you can choose your color too if you like. Does everyone see that? Does everyone know how to do that?
Yeah, I see.
Now, why is this important? Why do you guys think that a volume moving average is important? Or why would it be important? Somebody, anybody.
So you can
Well, for one
predict.
thing, if you got an order in and there's no volume, you don't know when that order is going to get hit.
That's true. That's true. I would definitely agree with you on that. I feel like though there might be some bigger reasons though.
Because if it goes above the average, you know something's happening.
Yeah. You know something's happening. You know to pay attention. You know that some either a price change may be occurring. Maybe there's a reversal occurring, and you want to pay close attention to that, and then pay close attention to the candlesticks around that high volume, right? Because that might be the point where you enter into a trade. And typically speaking, when we look at, let's go back to the hourly, and actually let's go to the daily. Now, for all this time, let's look at this chart, okay? Where is most of the volume happening? Somebody, anybody. Look at the bottom here.
Buying, I guess.
Leftmost.
On this side?
No, on the right, a little bit more on the right.
And what's happening to the price action as the volume is increasing? We're going up. Basically, I'm drilling into your heads. Pay attention to volume. Pay attention to volume. When you find, for example, in stocks, when you're day trading stocks, or when you're positional, or I should say swing trading stocks, normally what ends up happening is that the volume starts to dry up, and that volume drops and it's decreasing. That's usually a signal of a price reversal in the down, right?
Now, correct me if I'm wrong, but I mean, volume is like, it's something that's happening right now, So if you see the volume is very high, isn't the price already up by that point?
Yes, but again, that's not necessarily indicative of it going down. If anything, it's more indicative of it going up. What I'm trying to say is that you're looking at not just 1 hour, let's say, if you're doing on a daily, you're not just depending on the 1 minute, only one candlestick and one volume bar. You're combining that. You're looking at some other things that are happening. I mean, look here, like we're going down, we're really down here, but there's significant buying going on. So if I'm here, right, if I'm at this point and I'm looking back at the price action before it, the volume indicates to me that perhaps there's going to be a swing back up because there's so many people buying. Psychologically speaking, and probability tells me that the average person, they're not gonna hit buy and sell in that second, right? They might hold it for at least a few minutes to a few hours, right? So that's important when it comes to your trading. Remember, you have to think in the opposition. This is kind of like a game of chess, so to speak. Does that make sense, Omar?
Yeah, actually, I think I see it now. I see what you're saying. Like the volume gets high and it seems to peak a little bit, like it goes up shortly after the price.
Okay. Volume, whales making moves. Sadiq, clutch. Sadiq, you got to jump in on some of these. Like, you got to start teaching us, bro. That's a golden statement. Volume indicates the whales. They're jumping in because they're the ones who have the most buying power, right? Whales, and for those of you who are not familiar with whales, it's a typical crypto term. that is thrown around. It's the people who ordinarily have the most capital or the most cryptos, right? They're the ones who are, they're jumping in, they're buying up everything, right? So there's some price action and price security going on there, and you need to pay attention to that. Volume is a tremendous indicator. One person or one trader who I hold dearly in terms of respect recommended a book. After the class, I can share it with you guys. It is available on Amazon as an ebook. It's like $5. Remind me if anyone wants that. I will definitely share it with you guys. It is all about volume and understanding how volume plays into your trades. All right.
Can you provide that name in the chat, please?
Yes, I forgot the name.
Thank you.
I have to go back and look at my chat history, but I will definitely get you that. Don't worry.
All right. Thank you.
Okay. All right. So we've covered volume. The next thing that I want to cover, as we only have about 24 minutes left, but I want to definitely throw this in there. This purple area here is known as your RSI, your relative strength index. Now, Omar Khatib, I know you know what an RSI is because we've spoken about it quite a lot. What is an RSI?
Oh man. So I'd be honest, you explained to me what an RSI is, and you explained it to me and you told me make sure it's like under a certain number, which I think was like as low as possible is usually a good thing, but I don't entirely understand what it is. So I don't want to.
So it's basically, the buying and selling that's happening. And it's a how shall I say it? It's a mathematical formula that gauges the amount of buying and the selling that's happening in at any given time period. Okay, so your RSI, whenever it is above 70, it is typically indicative that the asset, whatever asset it is, it doesn't necessarily have to be crypto, it's overbought. There's too many people buying at that point, right? And at some point, there's going to be a sell-off, right? What that point is, that's still left to be seen. On the flip side, you have the RSI being too low, and that point tends to be below 30, although for crypto, honestly, I feel like it's below 20, all right? So you want to pay attention to this. Your RSI is very, very telling, okay? It's very, very telling. Now, one thing from the RSI, and I want to see if I can find an example. It's known as the bullish and bearish divergences. Now, what a bullish divergence is when you have significant price action going up, right? But your RSI is going down. Oh, there we go. Right here. Okay. And that is indicative that what is coming, guys?
Sell off.
Sell off. Your bullish and bearish divergences are really, really telling. It's a great technical analysis indicator. It's a great tool to use. Pay attention to when you have price action going up and RSI going down, right? That on the bigger time frames, like the 1 hour and the 4 hour, they are extremely powerful for those of you who want to get into positional trading over a longer time frame, or even on the daily, right? You can utilize that as a tool. It will also works in the opposite, which is the bullish divergence. The bullish divergence now means that your price action is falling, right? But your RSI is rising, okay? And that is also really indicative, particularly on the macro, not so much really on the micro, but on the macro, you can definitely tell that, oh, this price is probably going to swing back up. All right. I think we have some questions. Okay. Oh, okay. All right, cool. Do we understand the differences between the two bullish and bearish divergences? Any confusions about that?
One more repeat
Sure.
will help us to enhance our knowledge. Thank you.
Absolutely. So your bearish divergence basically says or shows where you have price action going up, but your RSI, your relative strength index, is going down. And that usually indicates to you that at some point in the near future, that price is going to sell off, and that the price is going to drop. It also works on the flip side, where the bullish divergence, where the price action is going down, which appears to be bad, but the relative strength index is going up. And you typically want to utilize this on the macro scale. You want to utilize this looking at a bigger time frame. For those of you who want to get into more long-term trades, you're going to want to look at those things. Okay.
There's a question in the group. I just want to basically reiterate Omar. His question was basically what he said, what were the highs and low values of the RSI? Even though we answered it in the chat, I just wanted to basically bring it back to you.
Yeah. So 70 and 30 are traditional units that work more so for stocks. Crypto, I want to say between 70 and 80 for overbought, but definitely, in my humble opinion, it's really 20 and below for oversold. You definitely want to keep your eye on it if it's below 30, because instinctively what traders start to do is they tell themselves, look, there's so many people that bought this thing. It's cheap now. Let's jump in. So that is a useful tool that you guys can use as well. All right.
So over 70 mean oversold, we call it, right? Is that right?
Over 70 is overbought.
Overbought.
People have bought it.
Overbought. Okay.
Yeah.
So there's more buyers than sellers, right?
Yes, more buyers. Yes.
Well, it's not about there being more buyers than sellers. It's just that eventually what happens is that traders take profits. Right. Like, so now there's so many. Oh, okay, I see what you're saying. Yes, you're right. There are more buyers than sellers because the whales start to see like, yo, so many people want this. Let's just get rid of our bag, dump it on them, buy back when it's low, and ride it back up. And that's what they do. And sure enough, look up here, guys. The price is so high here. The RSI is at about 71. This is the 1 hour. And what do we have? What do we have that follows? The price just falls. You see? And so that's something that you want to pay attention to, keep in your repertoire, and look out for those bearish and bullish divergences. All right? I'm going to go back to the slides now because we're just about finished. I just want to highlight the bull flag versus the bearish flag. All right? This is a useful technical analysis tool, indicator for you to, gauge price action that's coming. Basically, what happens with the bull flag is that you have this pole, you have this rise that happens, then you have a descent. Okay? Then you have a descent. And then look what happens afterwards. Now, to the untrained mind, the price falling, oh, I'm not going to get in. I'm not going to get in. But whales don't think like us. All right? Whales don't think like us. Right? Price goes up immediately following this descent. This is known as a bullish flag. All right? The bearish flag is the opposite. The price goes down. You have something that looks like a flagpole, but the rise in the price lures. People start jumping in, right? Like, oh, you know what? Good time, but look what happens afterwards. So you want to pay attention to these patterns because it might be, if you're on the bullish end of things, you might say to yourself like, oh, bull flag. I know one of Jules' students, Omer, he plotted a couple most recently for, I think it was ZRX or it may have been Chainlink. And he was like, yo, bull flag. And sure enough, played out perfectly. The price skyrocketed afterwards.
Emphasis on the bullish flags, right? On the poles that you were talking about, right? Just to clarify.
Yeah, I mean, honestly speaking, it could be both, right? Like, depending on where you are in the trade or depending on what it is that you want to do, you want to pay attention to both. But definitely if you want to get in for like, a quick scalp or something like that, this is your, you know what I'm saying? This is your.
What I was saying is basically how do we determine when a bullish flag is already formed? It's because of the pole.
Yes.
Right.
Yes.
Right? That's what I'm trying to say. Is emphasize on the pole.
You want an elongated pole, and you want the flag. Look at this. It's a channel. You want that combined with a channel of some sort, depending on the time frame. This happens to be Forex, right? And this is on the 30-minute.
Right.
This is on the daily. Okay.
Right, but just for clarification purposes only, right? Because this long candle is elongated, right? And the channel seems like it's downward. You understand what I'm saying? right?
Yeah.
It doesn't actually mean that it's actually
Correct.
a bearish
That goes
flag.
back to my point.
Right.
Remember
right.
earlier,
So
I prefaced this entire conversation using the indicators by showing you guys the channel. You don't necessarily just rely on one thing. Right?
absolutely.
Never
right.
rely on just one indicator. I mean, at least I don't. I haven't found that to be effective. Okay. You definitely have to couple that. Look at other things that are going on in your chart. Right.
Absolutely.
Pay attention to volume. Pay attention to, are there patterns? What are the patterns? Look out for bull flags. Look out for bear flags. Yeah. Over here, the price channel looks upward. It looks good. It's on the daily, but right next to it looks like a flagpole. This looks like a bear flag. Nope, I'm not getting it.
Right. I just wanted to reiterate that for the
No, that's a
newcomers,
very good
right.
point. That is a very good point. And again, risk management. It is all
So-
about risk management.
So basically, if you see like, a real long, tall pole, you know what I'm saying, going up, then you're gonna pretty much, I guess, after the dip, you're based on patterns and general psychology of the market, it's likely to go up again after that dip. But
Correct.
if there's a very short pole,
Correct.
not a good pole, then an increase would
Not
signify.
necessarily.
that
I mean,
it's
I've
gonna
seen poles
continue
that
that trend.
are shorter that still fulfill the bullish flag. But again, that's why I said, you're not relying on one thing. You're looking at other things. You're combining with, maybe you're looking at the RSI in this instance. Maybe you're looking at the volume in this instance as well. Maybe you're looking, is the price action above all of the EMAs? If the price action is above all the EMAs, then the trend is unquestionably going to be bullish, right? Especially on the larger time frame. So if you have all of these indicators that you got volume coming in, we're above the EMAs, you got a bull flag. I mean, probability tells you this is a good time to jump in. All right.
Okay.
Now, in the interest of time, we have a little bit of time.
Yeah, we have about 13 minutes.
We have
And we
about
don't want,
13 minutes. I know you guys are probably tired. We don't have the time to go through all of these. What I am willing to do is, if you guys reach out to me, I'm more than willing to share my presentation with you guys so that you can refer back to it. But these are some bullish candlestick patterns, some neutral. What you will find is sometimes, like if you look at the top here, this is a doji. Look where the price kind of settles. It settles in the middle. That doesn't, right? So like from a technical analysis standpoint, it doesn't really tell you much, right? You're not really sure, like, all right, is it going to go up or down? This is an example, right? So you have neutral patterns as well that you want to pay attention to. You also have the bearish candlestick patterns. That's another thing that you want to pay attention to. This is a good resource that our teacher Jewel also shared with us, that I'm more than willing, like I said, I'm more than willing to share this presentation with you guys so you have it as a resource going forward. All right, so we're more or less, the last thing that we wanted to do, I basically did this.
Scalp King.
Well, we did it. We actually already did it.
Is that something fencing?
Fencing?
Chainlink. I know chainlink is a fencing. I have no idea. This is new for me.
I'm sorry, I didn't quite get it.
Chainlink is known to me. I'm into the construction, so I know chainlink is a fencing. So I'm just.
Okay.
Oh, chainlink. He's not gonna, because he's in construction. He knows chainlink is a fencing. Right, got it.
Right. I got you.
Chainlink fencing.
So we basically used Chainlink earlier, and we looked at some scalping entries and exits. My method is basically, it's pretty simple. I plot my Fibonacci levels. I utilize my EMAs. I look at the volume, and I set my entries and exits. I look for a 50-cent increase on 300, 200, 400 tokens, depending on how much capital that I have available to me. I'm a small-time trader. I started with 5,000 and have been working my way up in about a month, a little bit more than a month, because that's what I have available to me. Some people might have, I mean, if you have $25,000, like every day trader should, then, I mean, you can make much more meaningful moves within a single day to clear $300-400 within a single move that plays out within an hour. But yeah, so, all of these indicators, all of these tools, there are a lot more, guys. This is literally just scratching the surface. But I basically wanted to give people, for those of you who are new to the world of investing, to give you a brief outline to set your mind right, because mindset is 90%, I think, of everything.
Absolutely.
Right? And then to get you the technical aspect of it, to motivate you to start learning this so that you can make better decisions before you enter into an asset. And that's pretty much, I think, hold on, let me just go back. Oops. And I think that's it. So thank you guys so much. If you have any final questions, we have about 10 minutes for any Q&A, any questions, comments, concerns, feedback. I'm always open and welcome to those things. This is my first time, actually. I apologize if it was too lengthy, too wordy. It's my first time teaching this. Never taught this before. I hope it was beneficial to you guys. And I hope that you learned meaningful things. Question: what happens if you bought the dip and it keeps dipping? Ooh, I left that part out. Stop losses. Stop losses. Okay? So every trader, just as you have a target, you should have a stop loss, right? You should have a way, you should have, based on the price action, either a lower EMA, a lower Fibonacci level, or a lower trend line to say, okay, this isn't good. This price is not going to ride up. The technicals didn't work out. I'm getting out. All right. And so you want to make sure that you always have set up, because again, just as we said, you throw something up in the air, it's going to come down. So like you jump into a trade and you have no idea where you're exiting, right? If it starts to fall and you still don't have any idea of where you want to exit, that's a problem. All right. So you want to make sure, based on the trend lines, I taught you how to do the trend lines. If it breaks below the next trend line, that's probably an indication. Now, again, there is more momentum, bearish momentum. If the price is falling just steadily, the volume of of the price falling on the lower time frames is so much, right? It's like, whoa, let me get out. Let me wait for this price to stabilize, and then I can get back in. It's not about you just racing or jumping to get in.
And I also believe that it also encompasses it with risk management as well.
Risk management, right? You do not have to jump into every trade. You don't have to trade every day. What you have to do is mitigate risk. And then that way you will maximize profit. That's the objective. So when Kemaul makes $30 on a trade, hey, I'm happy. You know what I'm saying? If you make 300, great. If you're dealing with a substantial amount of capital, 25, 40, $50,000, great. I'm happy for you, but know what you're doing. Stick with fundamentals, stick with technical analysis, and more often than not, you will be successful.
Awesome. Okay, so let's open up the chat now, right? For anybody who has any questions, comments, concerns, or any feedback, right?
So I'm sorry. So Zamal, so you guys want to look at something that's current. Let's see. All right. So this might take some time. And we're almost out of time. And I'm pretty exhausted. I'm not gonna lie to you guys. So
yeah, 3 hours, bro. You know.
And I was preparing this through the days.
I'm sure you were.
but basically, my method of madness, Zamal, to answer your question.
I was just saying to set it up that way and end it with that, so you can see like all what you were showing, what you taught just now.
That's what I'm saying.
See, like okay, at this point, what we're seeing and what can happen in the next few minutes.
Theoretically, if the price is falling, right? I would go to my 1 hour, okay, and I would plot my Fibonacci levels. Sorry, give me 1 second. Okay, wait a minute, let me go back. I would go here. All right. I would start there. I would look at my EMAs. This is the 200 EMA on the 1 hour, right? We've already broken it, which tells me of a bearish sentiment. Volume isn't great on the hourly. Let's go to the 15-minute, zoom out. Now, the 15-minute, though, is telling me that we rose up and we came back down, but it's holding support, right? Volume, though, I don't like it, right? It's still low. We're riding below the EMAs on the 15. Let's go to the 5. This is my method of madness. Sadiq seems to have some knowledge on this. I would definitely like his input. Also, you zoom in on the 5 minute, right? See if there's any difference because as you zoom in on the smaller time frames, you get more recent price action, right? So again, I'm seeing, not so great volume. I'm seeing we tested an EMA, which can operate as resistance, right? Broke back down. And here, right? This is what you call a shooting star. It looks like a shooting star, which is a type of candlestick where the price rises up and then falls back down. It rose up again. It's only the 1 minute, but I would probably stay out. Go back to the one. I would probably stay out. And this is very general. There's more. I would, in this situation, I would probably draw up, patterns, triangles, looking at other trends before I formulate my opinion on this. I'm also looking at RSI. Let's look at RSI. 1 hour is kind of low, which means it might reverse soon. Let's look at the 15. It's low. Midway might rise up. Basically, if I'm here, look at that. That's a doji right now. The hour isn't over. All right, it's almost over. So it shows it's kind of indecisive, right? So I might stay out. I might wait. I might wait for something a little bit more. Sadiq, what do you think, bro? I'm kind of curious.
And back to the patience part, right? That with most importance is that you have to know when to enter because of the three things that you said, your goals, your ideas, and what was it? The three things that you mentioned in the beginning, right? Your wants and needs and goals, if I'm not wrong.
No, absolutely. You do not.
Well, I think at this point too, you're not seeing what is one of the important thing too is confirmation. So it's not giving that.
Yeah, you want something that is decisive in either direction to kind of paint you the picture of where you want to enter and where you want to exit. Once
at this point, it's not clear. It's not given that. Yeah.
Oh no, again, I just literally looked at this for a few minutes. If I look at it a little bit more in depth, my opinion might change. But as of right this second, I may not. I don't think I would hop in. Sadiq says he's looking at the chart on the 1 minute.
And it's rising, he said.
It's rising, yeah.
So one more point that I do want to make, you want to look out for higher lows and higher highs.
Higher highs, right? Absolutely.
Okay. That is a point that, there's so much to be said about this, right? When the price action, that's when your upward channel starts to form, right? And so you want to pay attention to those things as well. And again, look, when it comes to reversals, you do not have to be 100% precise. You don't have to enter in immediately when the reversal happens, right? If there is a $2 swing on the price of an asset, so what if you got in midway? You made $1, right, on each share. That's good, man. If you had 100 shares and you made $100 and you less your fees and you only walked away with 75, good for you. That's a win. It shows that you're doing something right. All right.
Is this for the day trading or for the long term? This analyze
day trading.
Day trading.
This is more day trading. No, it's more like, hey, listen, we want to buy in and get out.
But I'm sorry, I'm not paying attention to who's asking the questions, but whoever just asked the questions, you employ these methods on any type of trading, you just switch the time frames.
The time frame, correct, right? So if you're, from what he said, if you're looking to day trade or intertrade, as he mentioned, right, is basically on a small time frame, right? And if you're doing a longer trade or a longer position or a longer hold, it would be over a longer period, a longer time frame. We could be a month, a week, or etc.
Yeah. So right? If you're looking more macro and long term, then you're going to pay attention to the bigger time frames. All right. Any other questions?
Yeah, I have one last question.
Yep, go ahead.
So when you're looking to, basically my question is, what's your main, what platform do you mainly use to enter and exit your trades?
If I'm using crypto, more often than not, I'm on Coinbase Pro. I don't use Robinhood because you don't own the keys to your crypto, and I don't like Robinhood. I hate Robinhood. I hope Robinhood dies. But anyway, that's a different discussion for another day.
I would stay away from that.
Okay, so now let me ask you a question, Kemaul, and agree to disagree on that, right? If you're doing small trades or not, I wouldn't say small trades, or I would say short-term trades, why wouldn't you use Robinhood?
Yeah, I guess, man.
I mean, that's just.
No, you're right. You're right. It's just,
there's no fees and stuff like that,
Well, the fees are baked in, keep in mind, because
Right.
the entry and exit prices that you pay are typically higher and lower, which covers the costs of those fees, which then plays into your tax document. So it's really a trade-off.
Right, it is.
It's all built in. It is built in. I don't know why you can't use like E-Trade or something. They don't charge fees for they used to have a $6.99. All of that is waived. It's free to trade. They didn't charge any fees.
I believe everyone's. I think
There's all the
Webull.
platform. Yeah, exactly.
Webull even
TD
gives you.
Ameritrade, E-Trade, a bunch of them. There's no fees, so why not trade on it? You have all the volumes and you have everything there.
Well, I'm paying about like $7 a trade on Ameritrade, right?
For certain securities, you will have to, but
Yeah, of course.
99% of them, they don't.
Oh wow, okay.
Yeah.
Do they have cryptos on which Zamal? Which one is that?
Oh, those
E-Trade.
don't have cryptos. They don't have. No, those are not cryptos. No, I'm talking about stocks.
Like me personally, right? When I'm intertrading or scalping, I that's why I use Robinhood. Unfortunately, Robinhood does not have every single asset that I'm interested in, right? But for, let's say, if I wanted to enter, I'm more of a holder, right? So if you guys know me, right, I like to hold my coins, and but I like to trade as well, right? And I feel trading crypto is much more beneficial to me than stocks and stuff like that. That's the only reason why I use Robinhood, is because I'm able to make these intraday trades, right? Make my money and walk away. Right. Yes, it might be off a little bit by a couple of pennies or a couple of dollars, right? But the thing is that I'm just trying to make my money, and
Yeah, if you're first time and you want to get started, I mean, Robinhood is not that bad. It's just 2 clicks and you're in and out, and they do all the work for you. But yeah,
right.
you'd
But
start with
obvious,
that.
right. Yeah. I, as a beginner, this is again, right. Just to reiterate, this is a beginner's course, right? We wanted people to basically, be able to get in and get involved as soon as possible, right?
Yeah, and on that point, I just want to emphasize this is a tip of the iceberg.
Right. Absolutely.
My purpose here is to motivate people to become more interested in reading charts and using technical analysis. As you start to do that more, as you start to look at charts more, patterns start to speak to you.
Absolutely.
You stop asking the questions and the charts start speaking to you, figuratively, obviously, right? But, don't think in any way, shape, or form that you're going to be able to just jump in right away and start dabbling and just be able to. No, take some time, research more, get more involved, learn more about the things that we've spoken about tonight, and expand your knowledge, and you'd be amazed. It feels good to have an extra skill set, guys. It feels good to know I could be anywhere in the world and I can survive even without having to plant my own crops, kill my own food, you know what I'm saying, and be able to do those things and supplement my income, right? Again, it's all about strategies and goals and needs and wants. So, just be be diligent, be persistent, keep learning, and you will be amazed at how much you will see and learn and understand in a year. It's going to be fantastic. And we're hopefully in the future, we'll be able to do more sessions like this. It's going to be amazing.
All right. Well, on that note, right, I just want to get you guys clarified. Basically, hey, Kemaul, thank you very much for putting this class together. Right, I really appreciate your time and effort.
Every minute of it, guys.
Right, I really appreciate your time and effort. Another thing I want to definitely mention to you guys is that, because of your trades and the gains that you create, right, or you gain, right, there are some implications behind that, which is what is it, the almighty Uncle Sam, for example, right? So on that note, I want you to know that we do have another class going on February 14th at 3 p.m., right, with our resident. Basically, she's very well known in the tax industry, and she's been helping us out. And hopefully, she's throwing another free class. I mean, the first free class, right? And hopefully, it'll be up to par with Jewel and Kemaul over here, right? And how to basically what taxes are, how taxes work, and it's very new to me as well, right? So I just want you to know that you guys want to look out for that as well, right? If there's any other questions, comments, or concerns, right? If you have any issues with what platform or what how to enact a trade or what their goals are, right? You please reach out to one of us admins, right? If there's a couple of us, there's Imtiaz who's there, there's Sadia that's there, there's Kemaul that's there, there's me, I'm there, and there's a couple of other ones that I don't remember right now. But anyways, right, that's what we want to do is basically create a community where we could help each other out, help each one of us help each other. You understand what I'm saying? So inshallah, hopefully that will be there. I'm gonna post it up. Kemaul, closing statements, bros.
Just thank you guys for attending. If there's anything that I could help you guys with, or if there's anything that I could do better, feedback, definitely welcome it. And hopefully in the future we get together for more sessions. Like I said, Waqar said, the tax class, pretty beneficial. And in the future, I know Jewel is planning to do some more classes. Definitely encourage people to attend that as well. And let's just keep building.
Yeah, that's the ultimate goal, right? So if there's anybody else that has any other questions before we wrap up tonight, all right, because we still have people on board. We got Samir on board, we got Jawad Ali on board, we got Mahbub Khan.
All right, I have one question.
Yes, sir.
If you guys could just shed minimal, knowledge on this. It's basically, what is the basic way to know about a Sharia compliant stock or asset? I mean, I know it's a very deep subject and it'll probably take really long to fully understand, but if there's any tools other than Zoya or Islamically, like if I can just go look at a stock and say, based on this, is Sharia compliant or not?
All right.
Jawad, are you Jawad from our WhatsApp group?
Yes, I am.
Oh, so I think a lot of the guys rely on Zoya.
Yeah.
And another application.
Islamically, I believe.
That's probably the quickest and most informative way of finding out Sharia compliant assets. Please be advised, though, that ordinarily those applications only advise so as far as to the level of risk that you're taking in terms of, is this asset halal or haram? I don't think there's anything out there that specifically says like, yes, this is 100% halal, or yes, this is, without question, this is haram. So it's just kind of like giving you a understanding of like, yeah, you can use this. So Zoya, I'm sorry, you can invest in this without worry, so to speak, but it's ultimately left on you, and those dynamics change, right? So you kind of have to be up on it all the time. Other than that, I'm not really sure of anything else. If anyone knows of anything, definitely share it in the group and let us know.
Okay, I just wanted to basically mention that in the chat, Halal Stock Talk, right, is supposedly Joe Bradford's website and TikTok, I believe, right? From just I'm just assuming, right? So you might want to follow him. He does. Right, Joe Bradford has a lot of info on his website for compliance, etc. Zoya and Islamically are tools for reference. Halal stock talks are about AAOFI standards, right? It's separate, I guess. I'm not really sure, so I'm just relaying the messages. I'm sorry if Sadia could just chime in and basically.
I don't know too much myself. I'm trying to find resources myself, but halal stock talk, I think somebody else on the WhatsApp group, I think Hasib or somebody mentioned it. And he talks about, he goes into more detail about certain things. And then Joe Bradford is like a proper, I think he's on the board of Zoya and stuff. He's their like scholar for all this, for the guidance. But yeah, I don't know if there's like an easy way to tell right off the bat. You know, there is like research involved, but yeah, that's a good question. I have the same question about a lot of crypto myself, but I try to kind of see like, okay, when my rudimentary understanding of what's allowed in traditional finance, and then I try to look at what the crypto is designed for and what it's doing, and if it's doing something that wouldn't be allowed in traditional finance, like I don't invest in it. That's my personal rule, but I'm sure there's more to, you know, I'm not a scholar, so.
Right, and just on that note, my personal opinion is like, hey, listen, I'm going to invest in something until somebody provides me a reason to tell me not to, right? That's just my opinion, right? It doesn't apply to everybody, and you know, it's basically, hey, listen, if I feel like, you know, because you know, the only reason why I say that is because when I was dealing with crypto back in 2016, 2017, everybody was telling me it's, you know, haram, haram, haram. And I'm just like, okay, you know, now, you have to provide your, you know, if you're going to claim that it's, you know, and I'm taking this straight from Yasser Qadhi's book himself or his thing, you have to provide me to tell me why it's haram versus why for me to provide why it's halal, right? I'm just putting it out there, right? And some people might agree, some people might disagree, and if that's, you know, it is what it is. I'm sorry about that. Omar, go ahead.
I think somebody had shared a document in the WhatsApp a while ago. I'll try and see if I can find it again, but it was basically telling you how to manually check stock to see if it's halal or not.
Right. Just to mention that Umar is one of those people that is in our WhatsApp group that basically he has access to Zoya and maybe another platform. I'm not really familiar which one it was, right? But he is our resident halal person, right? So if you have a stock and, you know, he has the access, he'll, you know, if you bring it up to him, I'm sure he would be able to, more than happy to help explain that. Anybody else? Okay, I think DeFi cryptos are probably haram. Yes, they probably are. I'm not really sure, depending on how you want to look at it, right?
I mean, these are going to be ongoing conversations, right?
Yes.
So guys, like it's 11:15
right now.
All right, so
I'm out. So
yeah. Basically, right? The halal and haram stocks, the crypto, DeFi, everything, it's a never-ending conversation. All right, you know, you're gonna push, you know, that's okay. All right, so we're gonna wrap up this conversation. I hope
in general, the general knowledge, I really appreciate that. I mean, I understand it's definitely a topic that goes way longer than just 10, 15 minutes. But
right. It would never end, right?
Halal haram has been going on for years and
years,
still
right?
going. So yeah, that's a wrong table.
Yeah. So we're not going to get into that. You know, we're just
Right.
going to get into basically, hey, listen, you know, this is unless it's explicitly haram, right? Unless it's explicitly haram, right? And we don't know the inner workings. That's up to you guys. If you know, we definitely, you know, obviously we have people in the group, right? So if you have some, you know, some situation with it, you know, and to alleviate your, you know, the investment purposes, right? You could ask, there's, I think a couple of people in the group, make sure it's known, right? Definitely participate in the group, right? And get yourself known and become, right? We don't want this to be like, hey, listen, you just consume the information and just left, right? We want you to consume the information and basically bring back into the group as well, right? After Jules' class, the previous class, right, there were, right, there was multiple people that that actively got engaged because of that class, right? And Kemaul did an excellent job over here tonight. You know, a round of applause for him. You know, I'm gonna give it to him, right?
Yeah,
Round of
man. Thanks so
applause.
much, Kamal. Appreciate it. And
Yeah.
I'm out. So, salam alaikum, everybody. You guys
Walaikum
carry
salam,
on.
Zamal. Thank you very much for being there.
Time
right?
for a snack, man. I'm getting hungry.
All right, take care, everyone. Thank
All
you
right.
for coming.
Assalamu alaikum wa rahmatullahi wa
Right,
barakatuh.
right. So basically, that's what we're